Good morning, ladies and gentlemen. Good morning, Cav. Good morning, Paul. Good morning, Ron. I got all the guys in here today. Morgan, Josh, Muser, Scott, Mr. Flowers, Algo, Ringa, Rob, Troy. Good to have you guys. Nice to see you here. Yo. Happy Friday, guys. Man, we are halfway through May already. How cool is that? Time keeps flying. They told me when I was young that it would keep moving forward at an alarming pace. They were right. It's all good. Everyone feeling good? Ready to follow some rules today? It's been a real patient kind of morning. At least if you're a NASDAQ trader, there's been a whole lot of nothing to do, which is okay. Yeah, Rob, I actually checked the setting this morning. Um, I saw your icon. I was like, dude, I'm going to my system settings. I'm going to make sure that the microphone's up. So um, hopefully you guys can hear me great. I'm ready for the day. I don't know about you guys. I'm just excited about the day. It's going to be a good day. You don't follow rules during bike week. You're not supposed to, Ron. Drunken and disorderly, I believe, is the right way to go, or at least disorderly. I don't do drunken so well anymore. Guys, we're going to do really the same thing we do every day. We're going to have a lot of fun. We're going to look at it. We're going to keep it light. But we're going to keep everything focused on chart reads. Good morning, Andy. And we're going to focus on patterns, and we're going to focus on rules and system. What's the word I'm looking for? Statistical advantages. Sorry. And we're just gonna do what we do every day, guys. We're just gonna get better through repetition. We're gonna create recognition through repetition. Morgan, did you see my post in the other room about you can do this colorblind? Awesome. It's not the first time that that's been brought to my attention, so I kind of had that one ready for you. And it's cool because it goes back to what Rob interjects in the room all the time. So it's all about the triggers, huh? Guys, it is. It's all about the triggers. And you'll see why when we get through. But before we do anything, let's check news. And then we'll get our day rolling. Today is Friday, May 17th. The beautiful Mrs. Novak turns 50 years old today. She's finally joining us in the 50 Club. So excited. There will be cake. But at 10 a.m., we've got cheeseburger leading index. And it's low impact. We're not really concerned about it doing too much. But at 10:15, FOMC member Waller speaks. And it's got a medium impact associated with it, which means that FOMC Waller might say something that creates a little unrest in investors. And then the market may react, and it may jump or spike or bump. And understanding when these news releases are, whether they are high impact or medium impact, what you do is you say to yourself, man, I don't want to be caught in this emotional roller coaster that may be going on. I'm going to go do something else. And it gets to the point to where you don't get run over in these crazy news releases. I check it every morning. I make sure that I'm good. And then everything that I talk about is going to come from the Nexgen website, guys. If you go to the education tab, there's two tabs. There's the software guide. This is your Ninja Trader how-to. This is the how do I make this stuff happen. And cool thing, guys, I put together a little video yesterday or the other day. Let me see if I can find it. So what I did is we put together this cool little video. And what the little video does is it teaches you. All right. Hello, everybody. Welcome to Nexgen Software Services. Never mind. I can't get it. My name is Mark. I run the live room, the education room, Monday through Friday. The same is true. Sorry, I'm killing myself here. Stop. There we go. I'll get it posted. It's just a little Ninja Trader how-to. And all of everything in that video is right here, guys. Anything you need, whether it's scaling charts, stops and targets, creating new charts, writing, adding templates, all that stuff is right here. We call these instructions. My wife had to explain it to me. Apparently, sometimes people just write down exactly how to do something. So if you ever need to go through there, you can check that out. And then the other one is the tutorial section, the trading guide. And this is where all the rules come from. Everything that I talk about comes from this area, guys. Everything that you need to be successful, I promise you, is provided in this room, most of it in the first hour. Um, it's my belief that Nexgen is, as I love what we do, and I believe in it 100%, and I trade it myself. And I believe that it's a very, very powerful tool that you just need to learn how to use. And that's what the classroom's designed for, guys, is we're going to learn how to use our Nexgen software. You're going to learn how to read your indicators. You're going to learn how to follow rules. You're going to learn how to be patient. Being patient is probably one of the most valuable tools that you could ever have as a trader. Um, and I want to show you something real quick. So it is 8:56 a.m., right? And my brother sends me a message. And he goes, "Have a good class. 0 trades. I feel good about it." Guys, we've been up and talking since 6 a.m. Eastern, and neither of us have had rules met for a trade since. Neither of us have had an opportunity to enter the market because we feel that there's a statistical advantage. And I think a lot of people believe that you have to be active to make money, that you have to be in a trade, catching every move to be successful. But the reality is you don't, guys. What you need to do is read your indicators and determine whether or not your rules are met. And if your rules are met, your rules are proven. They've been studied, they've been tested, they've been repeated, and they provide you a statistical advantage. So one of the biggest things we're doing with our new users is we're trying to create this trust in the methodology, and that comes through study. And the easiest way to do that is beginning with what we call a high probability trend trade. Because a high probability trade is when each indicator on every chart agrees with the rules for the trade. And typically, all your triggers are going to be the strongest, no termination conditions exist, nothing between you and your target. And this high probability trend trade, guys, the way we teach it in the classroom, is a trade that typically wins 70 to 80% of the time. This is a trade that creates an awful lot of confidence through the memory of success. This is a trade that most importantly teaches you to read your indicators, teaches you to become a chart reader. Because chart reading is about 90% of your day every day. And this morning was a great example of that, guys. I spent 3 hours in front of a market and didn't pull the trigger once. And the cool thing is it didn't cost me $1 to do anything. To do nothing was nothing. There were no losses. I wasn't giving it away. I wasn't hoping. I simply said, I don't have an advantage. I'm going to sit on my hands. Um, and the high probability trend trade, guys, turns you into a chart reader. It gives you the ability to recognize these advantages. And with a little bit of study, you will understand where the market is likely to continue. You'll be able to use that for entry points for the high probability trend trade. You'll understand where the market is likely to go, and that's going to give you the opportunity to set up intelligent targets. And you're going to understand where the market is likely to stop. And likely to stop is what we call a termination condition. And this becomes a giant red flag saying, hey, no more trades into this area. Let's wait for the reaction. And we're going to focus on each of these things extensively this morning. And we're going to do it, let me pull it up. We're going to do it with a high probability trend trade. And this is a trade that only has 3 rules. And man, I don't know about you guys. I love to make things more complicated than they need to be. And 3 rules doesn't feel like enough to make money, does it? 3 rules seems just way too easy. How could that possibly work? Well, these 3 rules, each one individually, creates an advantage, gives you an advantage, gives you the ability to look at your charts and actually say to yourself, man, I have momentum and there is a clear path. Let me find that entry area. So these 3 rules come together to create 3 advantages, and the 3 advantages are what create a trade. Um, Everything that I do is designed for simplicity in this classroom, and these 3 rules are going to come to be on only 2 charts. We're going to use a large chart and a small chart, and I'm going to tell you, it doesn't matter what the numbers are. Don't worry about the programming that goes into it. Big chart, little chart, pretty simple. Large chart leads the way. Large chart is that dude out in front of the lines with the drums. He lets you know where you're going. And the large chart with 1 bar, the most current bar on the large chart, you'll understand the direction of the market. And the direction is easy. It is green for up, red for down. Keep it simple. That's it. You're going to understand the momentum, whether or not that first rule is met, providing you that advantage of momentum. And you're also going to be able to see ahead of time and understand if you've reached areas that may have the potential to stop the market. And that's where rule number 2 comes in, defining whether or not you have a clear path. Once the first 2 rules are met on the large chart, and only after the first 2 rules are met on the large chart, you'll turn your attention to a smaller, faster chart. And this is a refinement chart. This takes that broad stroke of a brush, that one big slow moving bar, and it dissects it into about 15 to 30 bars, depending on the market action and what happens inside of it. But what you're going to do is you're going to use this refinement process. You're going to be able to take this one bar and you're going to be able to recognize a pullback and a bounce and an entry to get into the market for the highest probability trend trade. And that's where rule number 3 comes in, getting you into the market where the market is most likely to continue. These 2 charts are used because they're very much just a reflection of the psychology in the market, or who runs the market really. There is the large crowd, large chart, large crowd, easy to associate. This is this giant group of people with more money than you, more money than me. And they determine which direction the market's going to go. And they determine whether or not there's going to be momentum. They establish that momentum through buying and selling. And the large crowd will react to key areas that you're going to see long before you get to them on your large chart. And we love the large crowd. And I like to think of the large crowd like a lazy river, guys. A lazy river, if you just sit on your float and sip a pina colada, you always end up where you want to be. It's low maintenance, it's easy, it's not stressful, it might even be relaxing. But the second you try to fight that current, and it doesn't feel like you're moving fast, but when you try to fight that current, guys, you get wiped out quick. You get exhausted. It's very taxing. So go with the flow as a brand new user. And then the small chart's just kind of the small crowd. These are the guys that left their sunglasses 10 feet back and they're fighting the flow, and they get little shoves in there, but it's rarely long lasting. So we're going to take advantage of the small crowd to get us back to our entries on that small chart. And we're going to do this, guys. We're going to talk about it. About an hour every morning revolves around high probability trend trades. And I focus extensively on the 3 rules. We talk about each rule individually because what I find is that if you don't focus on finding a trade, but you focus rather on finding 3 advantages that create a trade, well, then you can always talk to yourself in terms of momentum when you look at a chart. You can always say, I have momentum, or I don't. And that may open doors for more trades. And you can always say, well, I have a clear path, or there is something in my way. And again, this will open doors for more trades. And then the entry area, guys, it's going to fluctuate for everybody as you grow with the software. But for the high probability trend trade, this is going to be your highest chance of success, taking that momentum in a clear path. And then I'm going to give you some pretty simple rules for being able to get into the market at the best of the best spot. Everything starts with strong triggers on the large chart, guys. Large chart has to let me know that the advantage of momentum is present. So on the large chart, if my background is green and that market's going up, both my small triggers and my large triggers must also be green. Let the colors match. And then, Morgan, I feel so compelled to talk about colorblind people. If the small triggers break above the large triggers, guys, that's what paints it green. So even if you can't see colors, once those small triggers begin to break above the large triggers, that's what paints that background. So the smalls have to be above the large. The large and the small triggers should both be wide. Hey, Kenan. And then the space created between the 2 trigger lines lets me know that the odds are favorable for the market to continue up. In a downtrend with a red background, when the smalls start to get below the large, that's what paints that background. When the smalls are down, the large are down, both are wide. It's the space between the 2 that lets me know that the odds are favorable for the market to continue down. And you guys are going to hear me say odds favorable momentum all day long. And odds favorable momentum can push a market in the direction of the trend. And odds favorable momentum can break key areas on that large chart. And odds favorable momentum can even cover some of the mistakes that new users tend to make. When I have that odds favorable momentum to the upside, I'm going to use that refinement chart, that smaller, faster chart, to buy Fibonacci support to get into the market and go with the flow. And when everything is down and the momentum is strong, I'm going to sell Fibonacci resistance on a smaller, faster chart. On this large chart, they look like tails or wicks, but the reality is this is an entire pullback and a bounce inside of one bar on that smaller, faster chart, and you're going to be able to pinpoint exactly where that tail is most likely to form. We don't trade the tails, we use the small chart, but I'm going to show you how to use those tails to go back and study and develop some trust. Strength leads the way, guys. Strength is an outstanding advantage, and there's a lot of plans in this room that I see you guys using that revolve 100% around momentum. But when the small triggers begin to return to the large triggers, when they work their way inside of the large triggers, we call this a weakening of the large triggers. And when I have weak triggers, anything can happen up or down. I'm a huge fan of language, guys. I was an English lit nerd in college, and if I'm just taking two phrases, odds favorable, anything can happen. There's only one that makes me feel compelled to risk my personal money. And it is that odds favorable, guys. Let it lead the way as a brand new user. And what you'll find is that as you grow with the software, when you embrace the best of the best, pinpointing the top of that tail, taking that short trade with momentum, you'll begin to recognize and speak to yourself in terms of advantages. And when both triggers are still down, one of the smaller inside of the large, this is the first sign that momentum is slowing. You will verbally say out loud, scare the cat, momentum is slowing. I can still take a short trade, but my chart reading needs to tell me that the other charts agree. And then when both triggers down, one inside of the large, you have that weakening or the slowing of the trend. Again, scare the dog. Man, anything can happen trigger. Say it out loud. Build that recognition. Guys, this is where you'll get to a point where you still might take short trades, but your ability to manage is going to come into play, because when anything can happen, you have to be able to react quickly to manage those trades. And when those anything can happen triggers reach an area, these areas become more likely to stop the market. And that's kind of the segue into rule number 2, making sure that we're not in determination conditions. But before we do that, let's open up a large chart and take a look. And this is the S&P. You know what? Let's go to crude oil because it seems to flow a little better. Strong triggers, and this is a perfect example right here. Let's take a picture of it together, guys. Identifying strong triggers on the large chart. Space between the small and large, guys. These are strong triggers going both directions. And what I want you to see is there's one of those tails, and there's one, and there's one, and there's one, and there's one. And these tails represent the potential opportunities on that smaller, faster chart. So separation between the small and large, giving me the advantage of momentum. And if I go to the most current bar, can everybody see? The smalls are below the large, both are wide, both are angled in the direction of the trend. We have odds favorable momentum to the downside. Can you give me a Y in the room if you see this? This is the most current bar on crude oil. And then if I go to the S&P, on the most current bar in the S&P, guys, I have odds favorable momentum to the upside. That one bar is defining direction. That one bar is defining momentum. But now we've got to let that same bar let us know whether or not termination conditions are true or whether they're false. Because if there's no termination conditions, no likely to stop areas, I'm going to have room to my target. And if I have room to my target, well, that's the advantage of a clear path. So let's go to what are the areas, guys? Lines on a large chart can cause trouble. It's the easiest way to think about it. If you just think of these areas as lines, you might resist the temptation to make one line more important than the other, because none are. We're going to be looking for divergence highs. We're going to look for divergence lows. Divergence is just, it's a pink line up top and a light blue line down low. And it means that there was a loss of momentum at a pivot. See how the market goes up and down and that line prints? We're going to use these lines to understand if we've reached a spot that may stop the market. We're going to look for red resistance and blue support, yellow one-to-ones, and even mid-bands sometimes. Good morning, Miss Debbie. But we're going to use the trigger lines. The same trigger lines that gave us momentum, they're going to let us know if the area is likely to stop the market, if they have the potential to break, or if they've actually broken. My hope and prayer for you guys is that you go back and you start looking at these termination conditions, because when you do, you're going to develop an enormous amount of trust, and you're probably going to be a little awestruck at how often they do stop the market. And I'm going to give you the recipe to make sure that you never get caught in it. When price reaches an area, and let me back up just a little bit because I want to share this with you guys. These guys make decisions at areas. Hey, JW. The guys in charge, the ladies in charge, they make decisions at these key areas. That's how it really helped me grasp the idea. When the buyers who are in control make it all the way up to a yellow 1-to-1, decisions are being made. They're either exiting and taking profits. Maybe the opposing force, the sellers, are entering the market. But what happens is the closer you are to these areas, when they're there, that decision making kicks off, and you'll find that your advantage goes away, and it goes away quick. So if price reaches one of these areas, in this case Fibonacci support, all you have to do is ask yourself, where are my triggers? And if my trigger lines remain above support, no more short trades into that area. And if they reach resistance, price reaches resistance, and all the triggers are below resistance, well, no more trades into that area. And I'm going to show you just how simple it can be. We're going to go to crude oil, and let's blow this up a little bit. If price reaches yellow 1-to-1s and the triggers remain below, you guys knew about this area for 2 hours. No more long trades into that area. It's behaving as a termination condition. Can you give me a why, everybody? It really is that easy. And this is what it looks like in the moment. Price gets to the area, the triggers are below. Guys, don't waste your money. Price reaches support, triggers are above. Don't waste your money. And if you scroll back, what you start to see is the triggers don't break a divergence low and it bounces. It bounces off of resistance. It comes directly from support. Look at the indecision around these areas. Sometimes buyers and sellers fight. Guys, it's not coincidence that they're straddling this line. Support holds. The market ramps up. Support holds. This support line right here, guys, stopped that giant move down to the tick. So you go back and you study these and you look at these. Look at this. There's a termination. It did reverse the market. And look at all that momentum. Just for grins, guys, I don't know if this is going to be a trade. And this is mid-bar. There's not even a tail yet. But I'm going to circle right where it appears like it might be happening. And we'll come back and we'll look at that in a minute. But let price reach the area, guys. So if price reaches Fibonacci resistance, 69.80, and the triggers remain below, it's okay to do nothing for a moment. Just wait for the reaction. It's a patience piece. It's either going to break out where the triggers begin to smash through. It has the potential to break. If the small and the large get to the other side, the area is broken. Or it may reverse, guys. We may see the same thing that we just saw in crude oil where it bounces, reverses the market. The reality is that we will never know what the reaction is going to be. They're not going to send out a memo. There won't be a TikTok video about it. So if price reaches an area, triggers remain below resistance, above support, your best course of action, if you want that clear path, is to do absolutely nothing. If the small and the large triggers get beyond that fib, well, then the path is clear. And I'm going to tell you, once again, we're going to go with, Rob, you set me up on this one for the day. I appreciate it. It's not the color of the fib. It's not the location of the price bars. It's the trigger lines. If the trigger lines, small and large, are above resistance, it behaves as support. These lines could be black. These lines could be bright pink. Now the area is broken. So no triggers, no trade. Both triggers, let's look for our rules to be met. Sometimes areas break, guys. Momentum tends to break areas if it's going to break them. You're going to be able to recognize that potential to break by the location of the trigger lines. If the small trigger lines smash through the area, but the large triggers are lagging behind, that odds favorable momentum with that smashing of the small triggers lets me know that this area has the potential to break. But it's not a clear path. It's not a broken area because remember, we're keeping it simple. The only way for an area to break is if the small and large get to the other side. So guys, this is what we call a 50-50 look. 50% of my triggers are through, 50% are not. So I'm going to make sure that my momentum is outstanding. I'm going to make sure that my entry is top notch. And I will give you a plan how to take this, but this will be your first medium probability trade. You'll notice here, the area didn't break. It had the potential, but it still reversed. Here it had the potential, and sure enough, it did. And guys, even when you come back here, you're going to be able to find opportunities on these 50-50 trades. Gold charts, Morgan? That is such an incomplete thought, my friend. Do you need gold charts? You just like the way it flows off the tongue? Take a picture. Drop it in the room. Tell me what you see. I love it when you guys scream out things. Show me a picture with your annotation. Pretend like you're teaching the class. Tell me what you see, and we'll discuss it, I promise. So guys, if price reaches yellow 1-to-1s and the triggers remain above them, that is your cue to say to yourself, hey, no more short trades. Very much like when price reached these yellow 1-to-1s, you said no more long trades. Check it out, guys. There was a tail and my circle was right on top of it. I can't wait to go look at that. So price reaches these yellow ones. Triggers stay above. Is that everybody's good? No short trades. And then look at this. Price pushes up to resistance. All the triggers are below. No long trades. Trigger color doesn't agree. I don't have momentum. And guys, this carries on for about 45 minutes. There's about 45 minutes in the market where your rules simply aren't met, where you don't have a long and you don't have a short, and you can't trade into areas, and you can't trade without momentum if you're following rules. And this is where you have to really say to yourself, my money is worth an advantage. My money is worth having an edge. So I'm going to be patient, and I'm going to do absolutely nothing, and I'm going to give nothing away. Because eventually my trade will come to me, and my trade says that I need momentum. And my trade says that my trigger lines have to clear trouble and give me a clear path. And then guys, you're going to be able to pinpoint where that market is most likely to continue on a smaller, faster chart. See how I circled the tail? I could have circled the tail here. We're going to go to a smaller, faster chart and see if there was a potential entry. But it's what you don't give away when the rules aren't met. It's the money that you don't waste, that you don't toss out the window, that you don't set on fire, hoping that areas break or wishing that no momentum would carry the market. Guys, it sets you up to keep every penny of what you make on these best of the best, these highest probability trades. So on the large chart, guys, lines are problematic. Is everybody comfortable with that? On the large chart, we're going to use lines to determine whether or not a termination condition has been met. We're going to use fibs, yellow 1-to-1s, divergence lines, and if price reaches them and the triggers don't break, we're going to sit on our hands. Well, on a smaller, faster chart, on a refinement chart, guys, we're going to use lines for entries. And they're going to have a little different role than they do on the large chart. So my entry chart isn't where I'm going to use lines to have problems, but rather for entries. But there is one termination condition that I'm going to accept on the small chart. The only time a small chart is going to tell me rule number 2 isn't met is if 3 divergences in the same price range print. And guys, 3 divergences. Remember we said divergence is a loss of momentum. Divergence prints, I like drawing this picture live in class because I think visually it helps. If the market comes down and goes up, that's a pivot. That's all that is. This is a pivot. That's a pivot. That's a pivot. So every time it makes a V up and down, it's a pivot. And then if for some reason the momentum of the market refuses to follow price, if that momentum of the market drags behind, it lags a little bit, your software is going to run some calculations and it's going to let you see visually, hey, Morgan, Sergio, Muser, Paul, we're losing momentum, buddy, be aware. And it's going to print a negative number and a cyan line, a light blue line off to the right. The negative number has nothing to do with anything. It is just a byproduct of the calculation. Don't give a higher number more power than a lower number. Divergence either is or it is not. If that line prints, if that negative number forms, guys, you have divergence. If you just see a negative number, you only have the potential for divergence. But 3 divergences, 3 losses of momentum in the same price range may terminate the trend. Notice that when I speak of rules, likely, may, could, might, never do I say absolutely will, is guaranteed, it's going to happen, bet the farm on it. 3 divergences may terminate the trend. This is enough to let me know, to make me feel as though my statistical advantage is gone. So I'll see 3 divergences at a low, I'll see 3 divergences at a high, and it's going to help me see the change that I can't see on that slow moving chart. Guys, this large chart, it's a freight train. It's rolling down the tracks. It's fully loaded. It's hard to see it slowing down. So even with a clear path or odds favorable momentum in a clear path, if I see those 3 divergences from a high or low, I'm simply going to choose not to take that next short trade. I'm not going to hope that this mid-band holds, and I'm not going to try to get in at this mid-band. So these 3 divergences are strong. 3 divergences with weak triggers, smalls inside of the large, is stronger. 3 divergences with weak triggers and that last pivot higher than the previous or lower than the previous from a high becomes stronger still. So you're going to use your chart reading to help you see this. You're going to go, whoa, rule number 2 is not met. Let's not take that next trade. This isn't my best chance for success, guys. Is everybody good? So we've got, what do we have so far? We have momentum on the large chart, I think, right? Smalls above the large are wide, they're angled in the direction of the trend. Price has not reached resistance. It's cleared the previous resistance. I also have a clear path. Can you guys give me a Y in the room, please, if you recognize that the rules are met on the large chart? I have both advantages, and now it's time to go refine it to look for that entry on the smaller, faster. Let's have some fun. That's a small chart. Oh my gosh, there's that circle from the large chart. And what you're going to see, whoops, where's my large chart? There it is. That tail on the small chart, man, it happened again. Pulls right back to resistance inside of favorable large triggers. It pulls right back to resistance to a line on the small chart. Do you see the correlation, guys? 1 bar on the large chart is all of these bars on the smaller, faster chart. So this is your refinement process. This is how you're going to take that 1 bar and turn it into a high probability trend trade entry. You're going to do it on the small chart because the small crowd gives us that shove. The small crowd says, hey, let's fight. And the large crowd says, fight all you want. We're going to win. We're the large crowd. So rule number 3 says that we're going to use a limit order to buy or sell a pullback. That's that small shove that the small crowd makes. We're going to use a limit order to buy or sell a pullback at an area. Fibs, midbands, yellow 1-to-1s, guys. And those areas are going to be tucked inside of what we call favorable large triggers. And I think this is a great concept for new users. So trigger lines are nothing more than moving averages. And I have a very remedial understanding of the mathematics that go into this, guys. But what I do know is that price loves to come back to trigger lines. It's kind of crazy. It happens all the time. Watch this. Exhibit A. Price kind of pulls away from triggers, it pulls back to triggers. It pulls away from triggers, it pulls back to triggers. And guys, this flow really happens all day long. Trigger lines are a correction point. That's all they are. Trigger lines are just a spot where things may pull back. And when we tuck an area inside of them, we find that we get the best of the best chance of success. So on your small chart, there's 2 sets of trigger lines. There's the large triggers, these smooth triggers, and those are the ones that work with the small triggers to give us momentum, that space between the 2. And there's the synthetic triggers, and synthetic is a fancy way of saying from another time frame. The synthetic triggers on the small chart are the large triggers from the large chart. So we expect price to correct to those large triggers. When they're overlapping, one on top of the other, 2 snakes riding piggyback, guys, this gives us the smallest possible area to put, or the smallest possible range, we'll say it, to put areas inside. It gives us the most precision. It reduces risk dramatically. And as these trigger lines separate, as those correction points become multiple, it decreases accuracy, it increases risk. So For the brand new user, I want you to focus on areas inside of what we call favorable large triggers. And we're going to do the two-part process. When the large chart says up, we are going to look for momentum. I want you to keep it sequential, right? And if we have momentum, small's outside of the large are wide, everything's green, going up, I'm going to make sure that I have a clear path, that my trigger lines have made it above resistance, that it's now behaving as support. If I have a clear path, and only as a brand new user, if I have a clear path, I'm going to turn my attention to the smaller, faster chart. And I'm going to break this one down for us. So on the smaller, faster chart, a couple things are going to happen. There's a little bit of process. This is the one that you have to work the hardest on. The first thing I do is I wait for a reversal bar. I wait for a reversal bar to print on that smaller, faster chart because that reversal bar lets me know that the small crowd is beginning to fight. The reversal bar lets me know that somebody's going to try to push that thing down. The reversal bar is not my entry. It's just an indication that I've got to get to work to pinpoint where the market is most likely to continue. So the first thing I do is I find my favorable large triggers. They should be green, they should be wide, they should be up, they should be overlapping. This is where I expect my price to correct to, somewhere in there. But I want you to think of these trigger lines like clouds. Clouds can't stop an airplane, thank goodness, right? So what we need is something solid for the market to bounce off of inside of those trigger lines. Right here, I'm throwing my tennis ball as hard as I can. I don't expect it to stop here at the beginning of the throw. Reversal bar is not my entry. I don't expect the trigger lines to stop it. I'm not entering here, not at the trigger lines. I expect areas inside of trigger lines to give me what I need to create the bounce. So we're going to create what's called a window of opportunity. The window of opportunity, the woo if you're a Ric Flair fan, will extend from the highest point of support to the lowest point of support inside of favorable large triggers. Guys, this is where the market is most likely to bounce, where it's most likely to continue up with that odds favorable momentum, with that clear path. My job is going to be to activate a limit order right at the top of that window because remember, the large chart is absolutely flying to the upside. The large chart has absolutely nothing to bang its head on, so I don't expect the small crowd to push too far. I've got two options where it may bounce. That's my window of opportunity. And I don't worry about the areas beyond that correction point because if it goes there, well, I don't have my edge anymore. And then the same is true for smalls, guys. The reversal bar begins the pullback. Once I get the pullback, I find my large, my synthetic. Hopefully they're overlapping, one on top of the other. And then I'm looking to pick out areas inside. And guys, this is one of those magical moments where there is one line inside of favorable large triggers. There is one point where I expect the market to bounce and my limit order goes just below that midband. And I wait, and either the small crowd gets me or it doesn't. And things that I don't worry about on a small crowd, on a small chart when I'm looking for entries, guys, if my small triggers turn against me, I don't panic because momentum is established on a large chart. If one divergence prints, two divergences print, hell, I don't care because it takes three divergences on a small chart to keep me out of a high probability trend trade. And you're going to see this, and I pay no mind to the areas beyond the correction point. These are not a part of the window. One of the things that I see new users do a lot, and I want you to see how this works. I'm guilty of this, which is why I know it so well, is new users will say, all right, if this is my window of opportunity, you know what I'm going to do? I'm going to beat the system, and I'm going to put my entry order down here at the lower one. That way I've got less risk on the trade. And this is damn near a guarantee that it's going to bounce right there. And other things that new users do is they'll put their stops inside of those favorable large triggers below those areas of resistance. And they'll say, well, if the bottom one doesn't stop it, I'm only going to risk 3 ticks because I'm afraid to lose money. I want you to get over that. And on Simulator, I want you to get to the point to where you become comfortable taking losses because anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. But what we can do by understanding precisely where the market is most likely to continue, is we can mitigate losses a lot, guys. We're going to put our first protective stop outside of that window of opportunity, 4 or 5 ticks, beyond that correction point that is the trigger lines, which is why if those trigger lines are split, guys, your risk is going to grow exponentially. If the market goes past resistance, if it blows through a mid band, if it jumps past 1-to-1s and another fib, I don't want to be in that trade anyway, guys. And I'm going to take my little hickey, I'm going to dust off. And really what I'm going to do when I take that loss is I'm going to make sure that I followed the rules, because I know without question that if I follow this plan, if these were met, if I gave myself the highest chance of success, it's a trade that had a 70 to 80% chance of winning. And this becomes a cost of doing business, guys. It's paying rent on your storefront. The same is true for lows. And then with all the advantages, you're going to get a reversal bar more often than not. There's going to be some sort of bounce at that key area, and you'll be able to reduce risk above or below those reversal bars. And it is not uncommon, even on trades that fail, to see Nexgen users maybe giving up $30 or $40 instead of $300 to $400. Because down here is I hope it works anyway, and a stop right here says, man, I took the best entry, it started that direction, I'll take a little hickey and wait for the next one. So management really begins with recognizing the window of opportunity. And then I'm going to show you something here. Price pulls back, reaches resistance, man, and now we're right back into resistance inside of favorable large triggers. Do you see how we're still in the window? This is a small chart, it's a fluctuation chart. And so far, this one bar, guys, is still, all of these bars are happening inside of this one bar on the large chart. So you have to ask yourself, do I still have momentum? Do I still have a clear path? You guys want to go through an entry together? We haven't done this in a while. Let's take the cheater off. Dun, 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 dun. This is for you new guys that are trying to figure out entries, all right? Everything starts on the large chart. I need you to play along, guys. I'm not smart enough to do this on my own. Everything starts on the large chart. So the direction is down. Do I have odds favorable momentum? Smalls below the large are wide, they're angled in the direction of the trend? Absolutely I do. Guys, this is the best of the best. And then let me just pull it up a little bit. And this is a pretty common misconception. Has price reached the area? Have my price bars reached the area? Guys, this is what it's going to look like on the live market. They haven't hit it yet, right? That's a target. That's not a termination, guys. That's where I'm hoping to get paid with all this momentum. So I say my rules are met. I have momentum. Everything is screaming down. Life is good. Let me turn my attention to the smaller, faster chart. And everything is down, guys. My large are down, my synthetic are down, my small are down, my bars are down. And I'm starting to get this nervous feeling. Oh my gosh, I think the market might go without me. I think, oh, this is so scary because there's a good chance that I'm not going to get paid on this move. Let me just jump in. Let me just jump in right here because really, what's the worst that can happen? And then you guys that have been in my class a couple times, you're like, no, I'm not going to jump in there. You know what I'm going to do? I'm going to wait for a reversal bar. And there it is. And if you jumped in, you're like, son of a, oh, man. And at the time of the reversal bar, I'm going to go through the process. I'm going to find my triggers from low to high. The reversal bar already hit the triggers. The triggers aren't my entry. And then once I find those trigger lines, I'm going to reduce it to the lowest point of resistance and the highest point of resistance inside of favorable large triggers. And this becomes my window of opportunity. Is everybody with me so far? All we're doing is we're pinpointing exactly where the market is most likely to continue, so we know exactly where we want to put our limit order. You guys good? Feeling it? My limit order, your limit order, goes a couple ticks below that lowest point of resistance. And here's the great thing, guys. If the small crowd can do it, if they can push, see how the mid-band comes down? It's okay to adjust. There you go. You're in a short trade with the advantage of momentum. You're in a short trade with a clear path. You're in a short trade, having entered where the market is most likely to continue. And there's your reversal bar. And at this point, guys, from your entry at about 89, that's your risk. You've got about 6 ticks of risk. Is everybody with me on the entry here? Because this yellow box is your goal for 20 days. 78, 89. I don't have that fib GWC, so there wasn't a fib on my charts. All I can do is trade my charts, right? You trade your charts. I don't see any fibs. This entry is your focus for 20 days, guys, because if you can identify this entry, then you can identify momentum, and you can recognize momentum no matter what chart it's on. You can recognize whether or not you've reached a problem or whether you haven't. And you can recognize where the market is most likely to continue. So despite GWC and Ron having different looking charts, is everybody in line with what you see on my chart on the screen? Cool. That's it, guys. So here's the question. Is it guaranteed to win? Is this a sure thing? Am I promised riches because I entered where the market is most likely to continue? Absolutely not. But if I take 10 of these, do you suppose that I'm going to win more than I lose? Well, you have to develop some trust in order to determine whether or not that's a thing, which means that you have to go back and you have to circle these tails and see how they line up. And you have to go back and look for odds favorable momentum, and you have to circle a tail and go see what it looks like. Come on back to resistance, right at the area. Kind of split triggers, right? There's a couple back here, right off of support, right inside of triggers. So what you're doing is you're developing trust, guys. And you might have gotten stopped out of this one if you use the reversal bar. And then you may have went ahead and jumped in on confirmation, and you're in this short again. That's a little more advanced. But if you took this entry, you took that hickey, you lost 50 bucks, no big deal, guys. You're going to learn how to take this entry next and capitalize on it. And then from 89 to 80, not quite $100. So guys, are there any questions about the high probability trend trade? And for you guys that felt compelled to say we have different fibs, that's totally cool. I'm going to remind you guys that I adjust my charts a lot, that I draw on them, that I pull indicators off of them, that I rebuild them almost every day. But to make sure that we're kind of cool in the same spot, if you right click and go to your data series, make sure that you have tick replay. I'm 10 days back on mine. If you have a different number on yours, it's going to have different calculations. You may have different fibs. If you are in a different time zone than me, you may have a different midnight. There may have been a whole hour's worth of swings that go into the factors. And the reality is mine just might be screwed up. And I may need to go through and reset all my stuff. So always trade your charts, guys. Sometimes even different data providers will have a fraction of a second that changes things, that does it. So trade your charts. But I can tell you, if you took this chart and lost, it's okay. You had every advantage, this trade and lost. But you're going to get to the point to where you never miss this one, and you take the large chart momentum, the large chart clear path, and you reach Fibonacci support, and that $50 that you lost here is more than made up for on the second entry. Sometimes you got to go twice. Because all of this, let's see if we can do it. Let's take the one bar. All of this happened in that one bar, guys. That's your refinement process. Isn't that cool? Two simple advantages. Find an entry. That's all we're doing. That is all we're doing. Are there any questions about the high probability trend trade? Are there any questions about momentum? Are there any questions about areas? Are there any questions? Let's see if we can find, man, the S&P's kind of been a mess lately, hasn't it? Let's see what happened here yesterday afternoon. When the smalls are outside, when the path is clear, that's about 122. They've been fighting on the S&P. Right to a mid band, but it was outside of the triggers. Maybe not my best chance of success. I don't know, GWC. Show me a picture of your chart. If you'll do that, if you'll show me a picture of your chart, I'll talk through every option based on what's on your chart. You were doing it backwards, Paul? What was your number? What was your number, GWC? Let's look at it. 89? No. Was it 89? Right there? I just want to make sure that I do this right. Oh, thank you. Thank you, thank you, thank you. Dun, dun, dun. Strong top. Love it. At the time of the pullback, triggers were at the termination, so you chose not to. So GWC, even though it was a termination condition, that would have been your entry? Or that would have been your entry without the termination. Well, why wasn't it your entry then? Were you not in front of it? Okay, so this wasn't your entry. This is where language becomes important. And man, I'm going school marm on you real quick. Please bear with me. So what did I just do, GWC? Is I went from feeling like I missed out and feel left out, and the market did what I thought it was going to do, and if I just would have broken my rules, look at what would have happened and how great things would be. Or I say this wouldn't have been my entry because of a termination condition, right? Not my trade, not my money. Termination conditions keep me out. That's cool. So what's the next trade? Small triggers smash. Odds favorable momentum from a great top, and then you've got your window of opportunity right here. You're on 724. Am I on 724? Yeah. And you had strong triggers down. And you had an HVA line lining up with this one. So what happens, GWC, is it's as easy as saying my rules aren't met. For the brand new user, right? For the high probability trend trader user, GWC, rules aren't met, no trade. Does that make sense? Because you know I'm going to expand on it. Awesome. So let's go into it. GWC called this a strong top, and great recognition. What is a strong top? It means no triggers through the termination condition. That reverses the market. So do you guys remember when I said decisions are made at key areas? You knew about this one. So GWC calls this a strong top, and he knows that when a decision is made at a key area, that none of the triggers can break through, even giving a hint that it might break. And it reverses the market, which is that right there, and it gives this look of momentum. Whoops, wrong one. That's awesome, guys. This is the one that sets you up for success. This is the look that sets you up to break areas. This is the look that sets you up to push more in the other direction. So GWC, your first opportunity was at a termination condition. This is, and guys, this is advanced. This is not high probability trend trade. And then, Paul, we're going to go over the window of opportunity as well. GWC, we're going to go into bar fight mode. Have you ever heard me with this analogy? I took it from my brother. I'm going to use great big arrows real quick, big fat arrows. And I want you to see kind of advantage versus disadvantage. Strong top is an advantage. Trend down, odds favorable momentum, large down, small down, everything down. And then I've got a line. Because price didn't reach the second area, Malcolm. So the difference between a termination condition and a target, I'll show you exactly real quick. I've got a cool picture of it. Let me find it. The difference between a termination condition and a target is in order for something to be a termination condition, price reaches it and the triggers remain above. If price never reaches an area, then that area is a target. So this fib might be a target, might be a target, might be a target. So you go through the idea, the recipe, that when price reaches an area and the triggers don't break, it's a termination condition. If you haven't reached the area yet with this much momentum, well, that's exactly where you're hoping to get if you find an entry, and that's the target. Does that make sense? It's the idea that price must reach an area. Cool. So GWC, when I look at that first entry, things that stand out to me is I'm coming from a great top. There was also a loss of momentum at that great top. It produced the greatest momentum that I could ever hope for. And as I come into this area, I'm screaming, just screaming into it. And then I look and I'm like, well, maybe the small chart can be a tiebreaker for me, right? Do you notice that there's no divergence on the little pullback? That I have odds favorable momentum, and I have one line where I'm hoping that market bounces and continues down. GWC, this is where when you develop a little trust, confidence, a little pattern recognition, is you might say to yourself, I have more going for me than against me. I'm willing to risk a little money here. Does that make sense, GWC? And the same is true right here. When I start counting everything for the trade, this one little divergence might not keep me out of this 50-50 trade. So I love this picture, and I think that if you would have taken that trade, this look right here, GWC, this is what it has to look like for me to risk that. I have to be from a great top. I have to have the best momentum. There has to be no divergence. I have to have odds favorable momentum, and I've got to be able to take a really low risk trade. I love this picture, man. Thank you for sharing it. Because this is a great example of how when you start developing some repetition, when you start recognizing things over and over, you find yourself in a position where you're like, well, yes, that's cool. I'll take this chance. Thank you for asking that. Here, I'll reload my historical data too. Maybe I come up with that fib. But guys, that's pretty much the first hour every hour. And let's go through window of opportunity, Paul. Let's just do like a review. I have a lot of pictures, so I want to go through it. Remember that on the window of opportunity, I think the most important thing to remember, guys, is you've got to wait for the large chart to say go. You've got to wait for the large chart to say that the rules are met. You were on 3 days, so that was probably it then, GWC. Does it change at 10? Yeah, I probably won't end up with a new fib then. No, mine stayed consistent. All right, so for you guys going through the window of opportunity, let's talk about it. Large chart says go. That's the most important thing. You know what? Let's do this one first, Paul. Mr. Flowers. I hate that these don't fit. If anyone knows how to make these charts fit without having to go through all this nonsense, let's see. No, man, let me know. I'll give you a gold star. All right, Mr. Flowers, you ready? Let's go through it just step by step. Rules on the large chart met, guys. I can't stress that enough. Rules on the large chart, Matt. So step one is wait for the reversal bar. And just, guys, if you need it broken down in the client trades over here on the spreadsheet, I have both long and short entries. First, we wait for the pullback. The pullback says, hey, the small crowd's getting ready to fight. Once you get the pullback, find your triggers. Look for your triggers. Where are the triggers? The triggers are where we expect price to correct. But the trigger lines aren't where we expect price to bounce. And that's the difference. And this is what confuses people. Is people go, well, I wait for the reversal bar and hit the triggers. And that's very much an incomplete thought. And this is one of the reasons why I encourage you guys to write on your charts, to write the rules out on your charts. Because what happens is, let me show you something. Man, I'm going all over the place today. We're going to use this picture. If I believe my rules say, wait for a pullback, well, then this may be my entry. If I believe that my rules are, wait for a pullback to triggers, well, then that still might be my entry. But if I for the first 30 days, every time I take a high probability trend trade, I say buy or sell a pullback at an area inside of favorable large triggers. What does that do for me? That tells me by writing out my rules that my only bounce point becomes this area right here. These are my only areas inside of favorable large triggers. And I see this a lot with brand new users where they say, I had odds favorable momentum, but they didn't. Or they say, this was my area, those are my triggers, but it's not. So the first thing, the easiest way to get to where you want to be being consistent with these rules, guys, is make sure that when you're in the learning a process, that you really use the language. Buy or sell a pullback at an area inside of favorable large triggers. And what it does is it removes a lot of the doubt. It removes a lot of the wondering, a lot of the, man, I'm just not sure. So identify your triggers, find the areas within, because we're piecing it all together, right? Not buy a pullback, not buy a pullback at triggers, but buy a pullback at areas inside of favorable large triggers. And once I identify that spot, activate a limit order. And Paul, you can go back and study that. That's where circling those tails. And if you write the language during study, what you're going to find is that it becomes really easy to find the patience to wait for those trades. It becomes very easy. Is that helpful at all, or did I just say the same thing over and over and not really give you anything? And it's okay if that was okay. Sure. Okay, sure. You're using all the keywords that say I got nothing out of that, Mark. Okay. From the user guide, this is a good one too because it goes through the process. And I love it because this is the one that kind of goes start to finish. This is the picture that kind of goes from start to finish. And you get to see that it wasn't the reversal bar, and you get to see that it wasn't the trigger, and you get to see that it was the areas inside of triggers. And you learn to believe that this little loss of momentum on the small chart is no big deal because it comes in on the big chart. So cool, guys. And I'm telling you right now, if you blow a trade, it's okay. Let's just talk about why you blew it. That's a termination. That's odds favorable momentum. Look at these split triggers. Is it going to go from up here, guys, or is it going to go from down here? Does anybody know for sure? I don't. The only thing that I'm sure of right now is that that's a correction point, and I'm absolutely positive that that's a potential correction point, and I don't know which one it's going to be, and this stupid green line is floating in between the two of them. But my large triggers are a full bar away. Did anyone notice that? That the large triggers are all the way down here at the reversal bar marker? Welcome to the gap theory, ladies and gentlemen. The gap theory says that if I reach an area, even if I extend it and the large triggers can't keep up, price has the potential to come down and close that gap to the large triggers. it tells me that I shouldn't go long at this mid-band. I should wait for the correction. And it appears to be happening. We'll see what happens. I don't know if they're going to make it or not. But the gap theory is when the midband behaves as a termination condition. When those large triggers remain a full bar away, it's more likely to close the gap than it is to just arbitrarily go up from a green line floating in between two trigger lines. You're going to see this pattern a lot as you go back, guys. If you go back, you're going to see where you hit something and the large triggers are a full bar away, and it closes the gap right back to the large triggers. Let's see if it ever happens again. Oh my gosh, close the gap to the large triggers. Closes the gap back to the large triggers. Isn't that outstanding? We're just scrolling back and this pattern seems to happen over and over and over. What a great way to keep yourself out of trouble, hoping that you can take that long into an area. So guys, that's my first hour. Oh look, it worked. How cool is that? And now you might say, now that I've closed the gap, now that I've reached the lower triggers, since we're coming from a termination, maybe if I get confirmation, I'll consider taking a trade to the long side with this momentum. The gap is closed. I've hit the bottom area, but it's not perfect because I don't have any areas inside of favorable large triggers. The only way I would ever even consider is if the market gave me at least a push in the right direction. That's just me. Call me crazy. Do you guys want to take it with a little confirmation? Do you guys like the conditions on the large chart enough to take a chance? You guys tell me. I'll cancel that order. It's not high probability trend trade, guys. I don't have any areas inside of favorable large triggers. I'm using my chart read to decide, should I take a shot? I'm not saying take this trade. It doesn't fit the rules. Strong bottom. How did you take it already, GWC? Did you take it up here hoping that it would work? Muser says iffy. Man, guys, now I'm past the correction point. I don't want this trade. So GWC, if you took it from the top, your charts look very different than mine. Oh, maybe they don't. Nice, Ron. Couple things that would help you out, Muser. I'm sorry, GWC, excuse me. Get that reversal bar marker on your large chart. It'll let you know where those large triggers are. That would have kept you out of that trade. But do you notice how, and I think this is a great lesson, when we talk about rule number 3, when we talk about the advantage of being able to pinpoint exactly where the market is likely to continue, this is where I believe language pays dividends. If entries come from areas inside of favorable large triggers, watch this. We're going to do what we did with Mr. Flowers. My trade comes from an area inside of favorable large triggers. And GWC, I know you're a little more advanced, so this is for everybody. The first thing that I have to notice and understand is that these aren't favorable large triggers. The next thing that I have to notice and understand is that that green midband isn't inside of them. So I've kind of eliminated two parts of rule number 3. Does that make sense, GWC? And this is where I say, if I've got this split trigger look, if I've got 2 correction points, I love a little confirmation. I love something on my small chart that says, hey, guess what? We are going to go with that momentum in that direction. Let me give you a reversal bar mark. And if you'll notice, it never happened. So maybe that'll be helpful. But GWC, if you go right-click and go to your indicators, T3 Pro Trader, let me see if that's right. All right, I'm going to give you a picture. I love my reversal bar marker. And it's right here. It's T3 Fibs Pro Trader, and it's reversal bar marker 1, and you want it to show reversals, and that'll let you know if the large triggers are a full bar away and if you need to impart a little bit of patience on that trade. So thank you again for posting the picture. And guys, what you're seeing today are some of the most common mistakes that I see every day in this classroom. Split triggers, it just, oh my gosh, it just takes all the wind out of the sails, in my opinion. Good morning, Miss Cindy. So, and then Paul, let's scroll back. I want to do one more. I want to see what this looked like at 10:48. Cool. And here's an idea on split triggers as well, guys. Odds favorable, potential to break, and this is a pretty good lesson. Let's take a picture of it. So Paul, this is going back to window of opportunity. And let's go through the whole thing. Can we agree that the large chart's a pretty good look here? With all that momentum, the potential to break. If I'm going to take a shot, I need to look for an entry, right? So I wait for the reversal bar. And at the time of the reversal bar, this is the lowest point of my triggers, and this is the highest point of my triggers. Are you with me so far, everybody? We're just dissecting this bar. Because the triggers are split, there is one correction point, right? There's the second correction point. Everybody with me so far? Price may go to this one. Price may go to that one. I don't know. I have to be okay with the idea that I don't know. So then I start going for little tiebreakers. And this is what you're going to do when you start going with the software. Is you might say, dang, these are the only lines inside of triggers. And all that does is it keeps me out of everything until I actually hit lines inside of triggers. And this is where knowing the language for the rules pays dividends. Pull back, right? Pull back to area inside. Initially, favorable large triggers. If they're split, where are my lines? If no lines, is it really my trade? But you see how the lines, Paul? Those are the only ones inside of triggers, the only ones inside of a trigger line. So it eliminates everything until I get there, and I know exactly where my stop has to go, and I have to decide whether or not that fits my plan. Alex says that's a 50-50 with divergence, Mark. So Alex, that might not be your trade, right? Because a bad top in a 50-50 in divergence, you're going to lose this one more than you win it. Alex knows that. And that's going to be part of what we're about to talk about, guys, the KISS plan. And the KISS plan is what I give you guys every day. But before I give it, I'm going to give you a couple of different things. This is Chart Reading 101. So for you new guys, this is great homework for the weekend if you thought you were going to devote a little time to Nexgen. Everything that we do revolves around becoming a chart reader, because chart readers are what lets you know if your rules are met, guys. Being a chart reader lets you know whether or not your rules are met. And in order to get to where you want to be, you have to be able to recognize some looks and patterns quickly. So take 25 pictures of strong triggers, of weak triggers, of a clear path, of a termination condition. Take 25 pictures of that 50-50 look, that medium probability scenario. And then, Paul, this one's going to help you. Take 20 long and 20 short high probability trend trade entries. And what's cool is not just to take the pictures, guys, but to annotate your charts with the whys. Why are the trigger lines strong? Describe it. What's the advantage? What rule does it pertain to? Why is a termination? Describe the formula. What's the disadvantage? And what I've done is I've given you guys this tab on the charts. This is a pretty new endeavor. Some of you have already started doing this and it's paying huge dividends. But I take a picture of strong triggers. And when I take a picture of strong triggers, these triggers are strong. Odds favorable momentum, likely to continue. I'm talking about it, and I'm talking about what it is and what I see. And I go back and I'm like, all right, well, what's a clear path? Well, when the small and large get above support, the area is broken. The path is clear until price reaches the next area. And then I have to go through the process again. So if you guys have it in you to begin filling up that second tab on your spreadsheet to go and do this, what happens is if you talk yourself through each picture, and this is where I believe annotation pays huge dividends. What you're doing is you spend the time typing and analyzing and posting in your spreadsheet. You're not only recognizing the looks, but you begin to recognize the advantages associated with the looks. You begin to recognize the disadvantages associated with certain looks, and then you're going to piece these individual things together to create a trade. And you're going to understand the parts to recognize the whole. So I'm going to drop this in the room right now. Guys, the entire exercise will take you about 4 hours. Break it down. Do 5 of each. Do it once a day. By the end of the week, you will be a better chart reader. As you learn the high probability trend trade, I'm going to give you a checklist for entry with pictures of what a strong top or bottom looks like, of what odds favorable momentum looks like, and what weak triggers look like. You can use this to kind of check yourself as you take pictures. Termination, potential to break broken. And then here's your window of opportunities and the whole process that goes into identifying it. That may pay dividends for some of you guys. So there's that one. You should study that every morning as you go and search for those high probability trend trades. Next, I'm going to give you the high probability trend trade checklist. Print this out, put it on your desktop. I've never had anybody in the history of this checklist do worse than 70% winners, ever. If you follow this to the letter and you get a result lower, show me your trades, show me your results. I will change my verbiage instantly, but I haven't had anyone do it yet. Print this out, put it on your desktop, and this is what's going to help you police yourself as you begin to follow your brand new trading plan. And this is the KISS plan, guys, the Keep It Simple Sunshine plan. And this plan is a stepping stone in your learning journey. So Alex G, you were nice enough to post in the room that 50-50 had divergence. Well, if you're following the KISS plan, that's not your trade, but this is a stepping stone. This is focused on optimizing your chances of success with the high probability trend trade, with the 50-50 trade. And then through your simulation, study, class feedback, and continuous practice, you are going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's AI saying, man, when you can read your charts, you're going to see stuff, guys. You're going to see more entries. You're going to see better management. You're going to understand better exits. So this is not designed to harness you to one trade for the rest of your life. This is not a ploy to have you never find more opportunities. What this does is this teaches you to read your indicators. That's it, plain and simple. And your simple plan for consistency, new users, is don't fight the large chart. Don't fight large chart momentum. Don't fight large chart termination conditions, right? Don't fight the large chart direction. Just go with the flow. Define your entry. Your is all caps. It's highlighted. It should be underlined, right? Define your entry. Let it be your entry. Guys, don't say this is Nexgen's KISS plan. This is Lenny's KISS plan. This is Wayne's KISS plan. Rob's, Joel's, Jen's, Joe's, Paul's, Malcolm's. This is yours. Own it. Hold yourself accountable to following these rules. Or even better, write these rules on every chart you present to me and let me help hold you accountable to these rules. I have people that have followed this plan, guys, that have been funded in those prop firms within their first 30 days of ever being introduced to the rules because they kept it simple. They learned the very basic concepts that create an entry. They understood where the market was likely to continue. And then, guys, there's a management plan that goes with this. For you new users, really even for me, my plan is very mechanical, and I've been doing this for years. Everything is revolved around finding where the market is most likely to continue. That's why I spend an hour every day talking about high probability trend trades, because once you can look at your charts and you can say without hesitation that you have momentum, this opens up the door for a lot of trades. When you understand whether or not the path is clear or not, when you understand when these areas reverse the market, it opens the door for more trades. And defining this entry area first, it really kind of puts you in sync with some of the motion of the market. So focus on your entries, and then you have to manage it. Management should be, until you're a chart reader, just as mechanical as entries. I'm going to tell you right now, management scared the ever-loving shit out of me because there was a fear of loss, because I had to watch these little fluctuations on the chart. It was terrifying, terrifying to think that I was going to lose my monopoly money. So we came up with this. Get in where the market is most likely to continue. Let that be your goal every time, because once you know where the market is likely to continue, you know where it shouldn't go. And if you're on simulator, lift your hands up. There's nothing to do. It's either going to stop you out, normal part of a positive equity curve, or it's going to give you a reversal bar. And we're playing the if-then game, guys. If I don't get stopped out and get a reversal bar, then I will move my stop 2 ticks above that reversal bar. And I will do absolutely nothing until the next thing happens. And that next thing will be I'm either stopped out for a smaller loss or my first target is hit. And my first target for a brand new user is only $100 in the distance. $100, guys. That's not a lot of money. $100 is like half of a fancy dinner with your best friend. $100, you would be stoked if I walked up to you in the Walgreens and said, "Hey, here's $100, stranger." You'd be like, "Hell yeah, $100, right?" Guys, this $100 is designed to create confidence. It's designed to reinforce the idea that when you understand these very basic concepts, you can get paid. This $100 goes into your account. This $100 is the feeling of success. And you're going to move your stop to break even, and you're going to say, nobody can take my $100. And the part that people don't get is if the best you did every day was $100, and I would be floored if that's the best you could do every day, you made an extra $500 that week, guys. You made an extra $2,000 that month. You made an extra 24 grand that year. Guys, you paid for your Corvette on $100 a day. Everybody thinks it has to be home runs. It doesn't. Base hits pay dividends. And the cool thing is you take that base hit, you get rid of your risk, and with all those advantages, it's more likely to hit your second target than it isn't. And the second target's only $200 away, which means you just made $300 on this trade, 2 contracts, which means you just had a $1,500 week or a $6,000 month or a $72,000 year based on one high probability trend trade that went the distance. And here's the sad reality. Are you ready? I'm going to give it to you right now in a live chart. Is that if you took this trade at 08 and you got out at 88, you have to be okay with that $200 that you didn't capture. You have to be okay with the idea that the market just kept going after your exit. And just like entries, you will be empowered to craft a plan tailored to your personal goals. The same is true with management. Eventually, with management, you're going to begin to recognize things, clear path, odds favorable momentum, and you will be able to hold for bigger moves, guys. But in the very beginning, as a brand new user, the less moving parts you put into it, the easier you make it, the fewer decisions that you have to make, the easier your trading becomes, the more you can focus on advantages. And very often, and man, I hate that this happens, and it happened to me too, is you're going to see other people in the room posting trades that don't fit the high probability trend trade. You're going to see other people in the room posting momentum trades and HVA trades and counter trend trades. But the key to everything, and I'm going to share this one because I really like this one. And just to put you guys in the know, I created this when somebody sent me a private message and called me out and said that I shouldn't be showing trades that don't fit the rules, guys. To hell with that. New users, I blanket. I blanket you. I wrap you in my arms and hold you close to me And I give you very conservative rules in the beginning, recognition of advantages, a solid plan that optimizes your chances of success as you learn to read your indicators. So for new users, all termination conditions are bad. That's what it sounds like in the room. For new users, no momentum is horrible. That's what it sounds like to the new user. And for new users, areas not inside or beyond those areas, inside of those triggers, guys, that's financial suicide. Why would you do it? But here's the deal. They're not always bad. Your chart reading will let you know when they are or they are not, but until you have the experience to know when to use exceptions, it's safer that way. And guys, my goal for each and every one of you is that you find the confidence, the success you're looking for so that you can grow from that point. And just like anything, the more time you spend with it, the more you're going to see, and this is going to open those doors. So I get these new users and they see Ron. Ron, you're the best example ever because you give me heartburn. They see Ron fighting momentum. They see Ron fighting a trend. But what they don't see is the 6 months that Ron spent taking pictures and analyzing these patterns to make sure that they win more than they lose. All they see is some Yahoo on a Harley. Just kidding. No, it's not a Harley. Breaking rules. And they want to play trade police instead of becoming chart readers. So don't worry about what other people do. Focus on the basics and then you're going to grow. And when you get some time watching patterns, you can trade into fibs and manage, right? GWC, we talked about, and I'm not afraid to talk about it. We talked about when you may have crazy awesome advantages that have you trading directly into a fib. We talk about when you might be able to get in sooner than the high probability trend trade. Guys, we'll talk about all of that stuff. But you've got to learn the process that yields the results. You've got to learn to read your charts so that you know when the exceptions are real. And that's where the KISS plan comes in. If you keep it that basic, if you follow simple rules, if you're okay not keeping up with the Joneses, you will find an extraordinary level of success, guys. I see it all the time. The further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. This is true. This is gospel truth. I am behind the pulpit wearing my robe. So, guys, question everything. Question everything. If somebody posts a chart in here that doesn't seem to fit your rules, ask why they did what they did. I'll talk you through the read. I'm happy to do that. I want you to learn. I want you to grow outside of my grasp. Guys, I want you to fire me because you don't need me. That's my goal. But if you're brand new, give yourself a little grace. It's okay to be new. It's okay to keep it simple. And you'll get there. Too much biker noise? Got to go contribute. I like it. You call customs Harley based? Man, they were chopping Triumphs before they ever chopped Harleys. Just saying. Go have a great weekend, Ron. Stay safe. Say hi to some bikinis for me. So guys, I like to share this because I want to remind you that you're on a journey right now, and I'm just kind of your little Sherpa taking you up through the mountains, and you're going to see everything. So your ability to read charts, guys, it's going to take you to the second trade, that 50-50 trade, that one area not broken trade. And I appreciate that Alex put in the room, Mark, there's divergence on that 50-50. Because Alex remembers that this plan is designed to optimize. This plan is designed to optimize your chances of success. And guys, this 50-50 trade is the most lost trade among new users. This 50-50 trade is the biggest source of frustration among new users. This 50-50 trade is the one that everyone tells me they swore they took it right, but if they just follow the KISS plan, they could have avoided a loser. So I created this 50-50 trade. In the beginning, one area not broken, not 3, 4, 5 areas not broken, right? One area. Don't make them work that hard. It should be coming from a good top or bottom on the 13-2, which means that a termination with no triggers through reversed the market. Why? Because decisions were made that changed the whole direction of everything, right? And guys, if this is a no, then I don't have a trade. If it's a yes, well, then I have to have odds favorable momentum on the small chart or on the large chart. I have to have so much strength in my trigger lines that I anticipate it to break the area. And I need to have that exact same look on my small chart. My small chart has to be screaming. I absolutely, positively, without question, where's it at? I take a lot of pictures, guys. If I'm sacrificing my clear path because the area is not broken yet, I have to have momentum. I'm not going to give it up, and I want the best entry area. So large odds favorable, small odds favorable. And does everybody remember words have power? What is divergence? I'm going to write it in all caps in the room. It's a loss of momentum. Divergence is a loss of momentum. It is a visual representation of the loss of momentum in the market, which means that if your path isn't clear, don't give up momentum. And this is what kills more new users on the 50-50 is they refuse to accept that divergence is a killer. But if you don't have it, enter at the area. And it's so important that I put it red again, guys. If there's divergence, no trade for the brand new user to optimize your chances of success. And then you have to know how to manage it. That's all it is, Paul. It's just a loss of momentum. But let's use speaking to ourselves in terms of advantages real quick, right? If a 50-50 trade means that I don't have a clear path, do I really want to visually see a loss of momentum on any chart? Because look how my advantages start to go. So, and then down here in management, it reminds you again if divergence prints exits a trade. And you have to manage it differently than a high probability trend trade because it's not a high probability trend trade. Hey, John 20. So guys, this KISS plan is designed to optimize your chances of success. The KISS plan is designed to give you the highest probability of winning more than you lose as a brand new user. And from that confidence, from that chart reading, you're going to begin to find a million opportunities. You're going to be able to see so many ways to get into the market, to capitalize on momentum, to take advantage of a clear path. But you have to say to yourself, let's go. There's a termination. It reversed the market. I have momentum. I haven't reached the area, and I have an area right there at the trigger lines. And if the market comes back to this area, I am obligated per my plan to take this trade and be okay with whatever the result is. And guys, did everybody see how quickly that read just happened? That's your goal. It took me a fraction to identify the momentum. It took me a fraction to say it didn't reach the area. But Mark, it's so close, but it didn't reach the area. And that's the rules for terminations. I don't even have a reversal bar yet, and I know exactly where this market is most likely to continue if this is going to be a winning trade. And the cool thing is I already know exactly where my stop is going to go if for some reason this one doesn't work out the way I wanted it to, right? There's my window. There's my area beyond the triggers. So I'm looking at about 10, 11 ticks if this comes back and gets me in. And then the other thing I'm thinking was, well, if that price bar hits that termination condition before it pulls back, then this is not my trade. Guys, does that make sense to everybody? Paul, did you see how I did that? Momentum, clear path. There's only one line inside of triggers. The triggers are together. They're right on top of each other. And it just takes practice. It just takes practice. Here it comes. We're in. Let me put my stop where the market shouldn't go. I have 6 ticks of risk on this trade, guys. 09 represents $100. 19 represents $200. At this point, I'm powerless. It's either going to win or it's going to lose. My rules say take the trade. Guys, I just lost $120. So your job, if you took this trade, is to do this. I had a strong bottom. I had momentum. I had a clear path. I had an area inside of triggers. This is a trade that if I take it 100 times, should lose 20 to 30. This is part of that. This is a cost of doing business. Next. Does that make sense, guys? Because if you go through your rules, and if you know that they were met and true, you know you have a trade that wins more than it loses, you know you have a statistical advantage, and it's your job to take the trade. And guys, they just didn't want to go. Why didn't they go? Why didn't this trade work? Hell, I don't have any idea. Somebody with more money than me wanted it to go down. That's all it is. Does that make sense? Nice, Sergio. What a great way to go into the weekend. So guys, I don't mind taking losers in front of you in the room. I don't care if you guys take losers. What's important is that you take the right losers, that you take the losers that have the statistical advantage. I had somebody text me once too and said to me, well, you took a loser in the room, the software doesn't work. What am I supposed to do about that? Am I supposed to never activate a limit order? Guys, I would take this one in my live account every time it's set up. I wouldn't hesitate, not even a little bit. I trade what I teach. So anyway, that's my first hour, hour and a half. I'm going to go run a lap, guys. I'm going to go stretch my legs. I will be back in the room in about 5 minutes, so it's going to be Mike Silence. When I come back, we're going to take a look at everything that you guys have posted. We're going to relate them back to advantages. We're going to look at entries. We're going to look at exits. I'm going to give you feedback on everything. So go stretch your legs, guys, and I will see you in a minute. You heading to work, Morgan? Have a great weekend, man. Great week this week. Thank you for posting. Do you have a second? Do you want me to talk about what you posted? You had momentum. You had a clear path. The only challenge with this one, Morgan, is that your area is on the wrong side of the correction point. Does that make sense? Didn't trade into a termination. You had momentum. The path was clear. Your entry, your area was just a little bit beyond the correction point, which means that once I get past these triggers, I don't know where it may stop. I don't know if it's going to be the mid band or these yellow 1-to-1s or a mid band. Does that make sense, Morgan? This is where getting in the habit of being real literal as a brand new user with your entries typically pays dividends, and then you'll learn how to get creative. There's the same one again. And that's it. It was close, right? But if you're really kind of strict and adherent in the beginning to areas inside of favorable large triggers, well, then you just kind of skip this one and you're like, oh, cool, man. I'm starting to believe in rules. And then you'll figure out, Morgan, when it's cool to take it, like when the momentum is better, when you're in the meat of it, rather than this one. Josh, I haven't reviewed any yet, so you haven't missed anything. We've been ambling on about a million things. I'm going to go take a break, guys. I'll leave you with the market here. And I want you to see something. Just because the trade failed doesn't mean that there wasn't an opportunity. Ron has triggers or fibs that I don't. Ron, you have a lot of fibs that I don't. But I'm going to use Ron's chart. I'm going to show you something. If we were trading Ron's chart, we would have never taken that trade. Because that's a termination, and that's a termination, and that's a termination, and that's a termination. And this market is range bound per Ron's chart, which set him up for a beautiful short, which set him up for a beautiful long, which set him up for a beautiful long. So our chart said go, go, go. Ron's chart said no, no, no. Trade your charts, guys. You got to trade your charts. Good stuff. I will be back in 5 minutes. Mic silence. All right, guys, we're going to get into the second half of class. I'm going to scroll up to the very top of the room and I'm going to start clicking on all these pictures. And all we're going to do is talk about, what do I see? What are the advantages? What did you see? Um, and hopefully we all come away a little bit smarter. So Paul set us up with three of them. He does market replay. Market replay is an outstanding way to go back and increase your repetitions, to go back and get a little smarter, see patterns, follow patterns. And Paul says it's a weak top because it's not a termination that creates a full reversal. This is the best momentum ever. No divergence. Pull back to resistance. And he gets paid. And the cool thing on this one, did you notice that the divergence prints and now it's starting to go up? Kiss plan not met. Kiss plan met. Paul, great trade. Everything says down, hits a termination on every chart that he owns. He's already had two divergences, and you take a little snapback off the bottom. And I know that that's not a high probability trend trade, Paul, but you 100% nailed it. And then after that one, that termination that creates the reversal sets you up on the 50-50. And since it's coming from a strong bottom, you said, absolutely, I'll take that trade. I'll manage aggressively, get out of trouble, and then take that second one. And Paul, I don't know if you've noticed it, but in the last week or so, you have absolutely gone next level. You have 100% just like ditched so many things that were creating challenges for you and embraced all those things that don't. And I got to tell you, man, it's been great. All right, Mr. Flowers, odds favorable, wide triggers, just a jump in trade, right? Wish you'd seen this a few minutes back, I bet. But Mr. Flowers, this is nothing more than taking advantage of momentum and grabbing a little snippet right in the middle. Absolutely beautiful. Hard to go wrong with that. No, it's okay. As long as you understand why things aren't working, right? If you're taking the right trades, it's okay. And then I know you only got a tick on this, and that's awesome to protect yourself on a momentum trade. But do you see how, Mr. Flowers, are you with me? One of my favorite phrases that I say every day, guys, is you will understand where the market is likely to go. And Paul, do you see here at 79.38, you had one-to-ones, your triggers are slowing down. Everything says, hey, guess what? This area has the potential to stop the market. This area could reverse the market, and it did. And if you had just said to yourself, you know what? I know I'm in at 29 and it's only 90 bucks, but that's a problem spot. And that $10 is 9 times larger. Does that make sense? Someone asked me the other day, well, should I get out at the areas? Why not? Guys, I'm going to tell you, you paid good money for these areas, and these areas are freaking amazing. These areas are so solid. Let me see if I can find the picture that my brother posted the other day. And it was the S&P, I think, where the software literally called the top after a giant run up. Here we go. My brother sent me this picture. Pretty effing amazing. After all of that run up, it calls the high. 100%. After all that run up, Nexgen software called that freaking high to the tick. So go back and scroll on your large charts. All of you that need help not holding too long, understand that these areas are a great place to get paid. I love this picture. And I love that my brother posts that picture about 27 times a year. And it really is pretty awesome. Paul, it's a great entry. A little earlier would have been better, of course. But understanding where the market is likely to go just gets you paid. And that's really what we're here for, guys. We're here to get paid. We are here to make money. We're not here to look smart. We're not here to do anything other than try to increase our bank accounts through patterns that repeat themselves. So don't be afraid to get paid. All right, who's next? Miss Jen. And I believe she's not in here anymore, but let's take a look. Not a clear path here, not even odds favorable, chose not to take it. And then we do get odds favorable. And at the time of the pullback, you're okay. And that's one of those momentum trades and just rockets right up. Nice one, Miss Jen. Rob, so the yellow 1-to-1s, no triggers through, good indication, no more longs. Rob, absolutely perfect read. That is textbook termination condition. 100% don't do it. Beautiful read. Oh, there you are, Jen. So what you took was just that momentum trade, right? Everything says up, you had a pivot stop out, you're cranking, and then you had a clear path to get to right where you wanted to be. And it's just that quick little snippet, boom, bang, nice one. Momentum for the win, right? And trading from the area, not into the area. I think that's one of the biggest advantages. And then let's rip Josh to shreds real quick. Oh, I don't get to. Good top, yes. Odds favorable momentum, yes. Clear path, yes. You entered at the end mid-band, not inside of favorable triggers, but used momentum to build your confidence to take the trade. So Josh, if you have a termination, let's do this. I love this. What a great question. Is it a good trade? I don't know. Did it fit your rules, Josh? Then it's a good trade. Why did it fit your rules? Because Josh, with this look, with this look, with this look, and you've got one little bouncy spot. So the question is, Josh, the only thing that I would ever ask on this trade is where was your stop? If you get in at 05, where was your stop? How far past that mid-band floating in the middle? So your stop was in the correction point. I'm not saying it's not a nice trade, but I'm saying your stop was in the correction point, right? So what if, Josh, hypothetically, with these split triggers, it went to there? You don't get to pretend to be surprised, right? And I think this is the biggest thing. So you would have started drinking early. But that's why I talk about correction points. First and foremost, that's why I talk about having 2 correction points. So we've got one here, right? No areas inside of it. We've got one here, no areas inside of it. But Josh, what we do when we start getting good at reading charts, when things start coming together for us, is we start saying that this strong top is amazing. And this momentum is unbelievable. And this clear path gets me giddy. And I know that this isn't perfect. I know that that's not the absolute best of the best. But I'm going to take this trade. And I'm cool with $120 worth of risk, knowing fully that it may come get me. Does that make sense? You made a decision based on advantages, not based on hopes and fears. You gave yourself something to bounce off of, right? You let the large chart lead the way. You made a calculated risk on a little deviation from the plan. I love this trade, Josh. And the thing is if you didn't want to take it because it was hovering, you could pay a little bit and wait for the reversal bar, and then your risk is established. 2 ways to take it. Beautiful trade, Josh. Is it a good trade? I don't know. If it fits your rules, it's an awesome trade. If it breaks your rules, shame, shame. Everybody knows your name. All right, Muser, let's see what we got. Muser says strong bottom, crazy momentum, and that's that momentum style trade. As you're waiting for me to finish my breakfast, this came along. Entered above the highest point of support inside of favorable large triggers. Momentum was so strong you kept moving your second up until triggers started to weaken on the 13-2. I love it. Muser, what you took here was a textbook momentum trade. Small triggers break, snaps back. I think I even took a picture of it. this morning for Jeremy, if I'm not mistaken. That's the same trade. Pointing out exactly what you saw. That's awesome. And I think that the next picture in this series was when a momentum trade seems to be failing, like if you decided to exit, if you decided to exit, then yeah. That is very much a 50-50, isn't it? And this is one of those momentum trades that blurs the line, Muser. Can we agree that that is the absolute best look that you could ever hope for? And it's coming from the absolute best spot that you could ever hope for. And on your small chart, you've got momentum absolutely cranking and no divergence in one area. And the small trigger's already broke it and it pulled back right to it. And oh my gosh, I can't stop finding things that look good about this trade. And then the next lesson on it is that momentum, right? Your large chart's a slow moving chart, brother. Don't let that get you out, right? Not when this is still screaming. Smack your head on those 1-to-1s. Take some money up there. Beautiful trade. Everything about this trade is beautiful. I love it. I'm not concerned. I love hearing that. I have so many advantages. You and Josh both. Probably texting each other. Is everything kick-ass? Yeah, it is. Hey, let's enter trades. All right. Mark's going to love this. Beautiful. And the only thing that I could possibly say about this is what a great opportunity to hold that momentum all the way to the 1-to-1s and get paid right at the spot. And then you're out at 39 and you look like a freaking genius when that market crashes. Beautiful trade, Muser. All right, Sergio. I think Sergio already split. He made his money, said, I'm a GTFO, guys, but let's talk about it. He said, with odds favorable momentum, I'm going to get paid to the upside. I'm not going to trade into a termination condition. And when it reverses, there is the I'm going to jump in and hope it doesn't stop trade. Does everybody recognize this one? We see this a lot. This is the I'm going to jump in and man, I hope it doesn't stop. And then it stops, right? And Sergio says, I know that a momentum style trade may have to turn into a high probability trend trade because sometimes they lose a little bit of momentum and push back. So notice that, let's see, he's in at 93 and he says, quick profits, it's not the best of the best. And he says, but wait a minute, I'll get in below the mid band and when it bounces off the mid band, I'll add contracts. And I don't know what this exit is. The exit's ridiculous. I'm just going to say it, Sergio. I hope you watch the video. Why on earth are you jumping ship when everything is screaming to the downside? Even your small triggers turn in the direction. Guys, this is where if you take an exit like this, annotate your chart. Tell me what scared you. Tell me why you got out of that trade, because I'm telling you right now, I can't for the life of me see any reasons on that chart to jump ship. We already saw Morgan's. Let's see if there's a lesson in it. Hold on. Good top? No, but he thinks so. Man, remind me to send him an angry letter. Not on a large chart. Term conditions not on the large chart. May bounce the 50-50. Small chart. Wait for pullback. All right. So let's go through the whole read, guys. Not a termination condition, just a pivot with a loss of momentum. Big difference between a pivot stop out and a loss of momentum. In order for it to be a good top, it has to be a termination condition that reverses the market. This is just a pivot, so not a good top. And then termination conditions, if you can say not on the large chart, not. He's just looking for a pullback here. Just because it's not a strong top doesn't mean that odds favorable momentum and areas inside of favorable large triggers aren't a trade. And he's just waiting for the pullback. I like it. So Morgan, if you watch this on the video, it's a great read. And then Rob, I think we hit this one. Absolutely. Yellow 1-to-1s with no triggers through. If you're a high probability trend trade, your rules say don't do it. Your rules say no more trades into that area. GWC, we talked about that one, my friend. And then Mr. Flowers. Odds favorable. And it just didn't get you, right? Or did it? Set your limit at the yellow 1-to-1s. All right, let me figure out where we're at. All right, are you with me, Mr. Flowers? So it didn't get you for your high probability trend trade. Nice, Gary. Simulator, I'm assuming. Yeah. Paul, do you see how it was a pullback to support, but when you hit the support, the pullback it wasn't even a reversal bar yet. I can understand how you could miss this one looking for a trend trade, and then you could take this as that momentum style trade. Here you take the momentum trade, and then when the termination reverses and everything goes red, you take that beautiful momentum all the way down to trouble, and then with the loss of momentum, you get out. I like everything about this. I really do. And Mr. Flowers, did you catch the lesson about how you could have caught this one just as a momentum style trade? And then Paul W. All right, Paul, strong top, odds favorable, 50-50 trade, right? Not a clear path. Divergence prints, you get in. What is strong? The small triggers, Paul? Where are small triggers? So what we're looking at, Paul, that's okay. I love this. What you're saying is that with all of this momentum, the smallest possible momentum indicator that you could look at on your charts scared you out of the trade. Sound about right? Yep. Okay. So does your plan say if these turn against you, get out? I want to make sure. I'm going to show you how human nature jumps in and jacks us. Okay, so you broke your rules. That's hard sometimes. And I don't know if you're live or sim or whatever. If you're sim, hold, right? So if you're scared to lose on simulator, Paul, that's going to affect you when you go live. Right now, what you're doing is you're teaching yourself to believe in your rules. You're teaching yourself to trust your rules. And if you have rules and they aren't working for you, well, then let's work together and change them. But I'm going to tell you right now, and you guys, bless your hearts, you're about to get a story. If this isn't your rule and you broke your rule, what you're doing is you're telling your brain, it's okay to break rules if I'm scared. But what happens is scared turns into bored, turns into anxious, turns into nervous, turns into fearful, all these different things. But if you say, no matter what happens, my exit conditions aren't there, I'll take the loss. They have to come and get me. And man, my brother said this once and it resonated with me a lot. When I have the perfect trade, come and get me. I'm not giving it up. I'm not giving you my money. You have to come take it from me on the perfect trade. And I'll tell you right now, Paul, it would have got me right there because I never had a reason to exit. It would have got me right there because I never had a reason to exit. And then I would have been back in on that reversal bar that came next. But this is one of those things, guys, where you have to practice like you want to pay. So if you notice that you break your rule, and I apologize if it feels like I'm beating you up, Paul. If you know you broke your rule, if you know you broke the rule, don't write some bullshit reason on why you broke your rule. Say, didn't follow my plan, right? Oh, I exited because of this. You have to follow that up with broke my rules, didn't follow my plan. This isn't my exit. And what happens, Paul, is you get to this point where everything becomes if then, right? If a second higher divergence prints, that's an exit condition. If for some reason XYZ, that's an exit condition. And then Paul, you're getting to the point in your trading where even as this pulls up, you're going to say, I'm still in the window of opportunity with this look. I'm not even going to put my stop behind the reversal bar. I'm going to keep it hanging out here because nothing has changed to make me feel like this market isn't going down. Does that make sense? This is a practice like you want to play. So if you're on simulator, and Gary, you made 50 grand on simulator, that's amazing. You're the Monopoly king. Did you make it following your rules? Did you stick to the plan? Did you do it the way that you're supposed to do it? If you did, that's freaking amazing. But if you just take a bunch of chances and deviate from your plan, the second you go live, it's going to absolutely eat your lunch. You saw the reversal bar at the top and thought, oh no. Oh, up here? Yeah. And that's where you can take a second entry, right, Paul? Just because this one doesn't pan out the way you wanted it to doesn't mean you can't re-enter the trade. And maybe that's a little more advanced. And one of the things, I'm going to do two motorcycle racing analogies. Or the first one, because guys, I used to race them when I was younger and flexible and didn't hurt so much. But I was out at a practice. It's a 6-hour endurance at Texas World Speedway. And I'm running laps and practice, guys. And I'm at about 50%. I'm at about 50% out on the track, doing the occasional wheelie, dragging my knees, having fun. And the guy, a buddy of mine, blows by me, looks over his shoulder at me, and I'm like, man, Bradley's in a bad mood today. And he comes to me in the pits after practice and he goes, dude, Novak, what the hell are you doing out there? I'm like, Brad, it's just practice, man. Um, it's just practice. And he goes, yeah. He goes, but if you practice at 50%, how are you going to be able to perform during the race? How are you going to be able? Oh, that makes sense, Gary. Okay. Um, I thought you made 50 grand on it. I was like, holy smokes. I think you might be fudging. But my buddy's like, dude, you have to practice like you want to play. And I find that that's very, very true with what we do with trading. If on simulator, you are willing to break rules, when you go live, you're probably going to break rules. If on simulator you rely on luck, and Paul, that has nothing to do with your trade. This just sparked a question for me. And then the second thing that I realized is I had a couple years under my belt racing motorcycles is that there are novice plates, yellow plates out there, let you know who's new and still kind of wet behind the ears. And there's expert plates. And the difference, at least in motorcycle racing, guys, between a novice and an expert, it's not at all making mistakes or lap times. So Paul, it's this exit, it is what it is, that's all it is, whatever. If it didn't fit your plan, totally cool. But the difference between a novice and an expert is recovery time. Is Paul, can you take this exit because of fear and then recognize that that reversal bar was a shot at you getting paid? And eventually through repetition you will, and it's pretty cool. So anyways, that was a lot of rambling. Practice like you want to play, I think is what we were getting out of that one. It's a great read, Paul. It's a great read. You just got in your head a little bit on it. Zorro caught the momentum trade. I love it. Made some money, exited, and then when it headed back up, got paid twice. Zorro, you have developed such a plan for yourself that is solid. GWC, we saw that. Ron, momentum for the win. When a termination reverses, everything's going up. Ron was able to make some money with momentum on both charts. Base hits. Getting in, knocking it out. I love that. Great trade. Not a high probability trade, ladies and gentlemen. Nothing more than an opportunity to take advantage. And then we looked at your second one, GWC, and then Mr. Flowers. Ah! Market may come up to this again. It may not. Forgot about the gap, and the gap got you there, and you recognize that after the fact, Mr. Flowers. I like it. But guys, this is why everybody loves this jump-in trade. Everybody wants to be a jump-in trader. So let's do a quick little lesson on advantages that can be had when you take this trade. And we're going to do life cycle of momentum on the small chart. And I'm going to start it with a line that runs on the small triggers. So this is your equator, ladies and gentlemen, for you people that love to jump in. Yeah, that happens sometimes, Paul. For all you guys that love to jump into these trades, these momentum trades, if everything is going up and you're looking to trade up, when my bars are on the left side of these small triggers, this is the best of the best. This is the momentum phase. This is when everything is the strongest and your chance of survival is the absolute biggest. When they work themselves inside, I still have momentum, but I can see it slowing. And then when you get to the other side, it's over. So if you're looking for these best of the best momentum trades, if you're trying to give yourself the highest chance of success, that's your look, guys. The further outside of those small triggers you are, the more likely it is to work. And then as long as they don't close on the wrong side of the triggers, you can hold. But if they're already working themselves inside, then you can kind of visually see that the momentum is going away. And that's why we talk about weak triggers on the large chart. Weak triggers, anything can happen. Weak triggers on the small chart, anything can happen. It's pretty universal. So jumping in up here, I understand why, but you've got to be quicker on your exits, right? Got to be quicker on your exits. You've got to say, I'm in a momentum trade, and if the momentum doesn't last, I've got to get out of this trade. This can't be my trade anymore. So I hope that makes sense. And then GWC, you need to fix. Did you get it fixed? And then Paul, looks like a 50-50. Nope, it's a gap theory. Gap theory got you, Paul. Right? Close the gap to those large triggers. Everything was up. This is crude oil getting range bound a little bit. Large triggers didn't follow. Your entry is beautiful. Your exit makes sense. For whatever reason, 05, is that the 05 fib? That's weird. You've got a 12 fib here that doesn't show up on your large chart, and you've got an 05 synthetic that doesn't show up on your small chart. Paul, it may be time for a new workspace. No worries, Mr. Flowers. We'll go back to it. Paul, I know you like to create a lot of different things on your space. You like to see a lot of different things. The fact that this is brown lets me know that you're running multiple things on the back. I don't give trading advice, not at all. But from an educational suggestion, can we call it? You're at the point, Paul. Paul W. You're at the point with your unbelievable reads. You're at the point with your chart reading, with your recognition, with all this stuff, that you don't need all the garbage. You've really cleaned it up to the best of the best. Remember when we first met, what it looked like? Take the 5-1 off of the 13-2. It doesn't belong there. It doesn't belong there. So are you relatively computer savvy? Eek. Okay, so let's do this. Two things we can do, and I think that this is going to pay huge dividends for you. Deleting your old charts and templates, and this is kind of like, do you remember the movie Mr. Mom where he gets rid of his whoopee? And it's just time to get rid of the whoopee. This is getting rid of your whoopee, Paul. Go through and get rid of your old workspaces that are cluttered and overlapping and crazy. Get rid of the templates that don't make sense anymore for you. And go to the resource page and download. I know you clean every day. I'm telling you to give it an enema right now. Get rid of everything. You're starting like it's day one, brand new. Are you on? You're on 8, right? Not 7? You're on 7 still, aren't you? Do we have 7 indicators on the resources? Yep. We do have the indicators and everything on there. Um, but what happens, Paul, is you've got, and you can tell just by the colors that there's overlapping stuff, and you're so stinking good at this now. Go to basic, right? Just go to basic, get that reversal bar marker on there, make sure that your fibs come over, that the synthetics are where they need to be, brand new workspaces. And if you want to, even more so, save these workspaces so you don't feel like you're running naked into the breeze. Save them somewhere on your computer so that if you absolutely hate having it minimalistic and just focus on the absolute best, you can go back to this and no harm, no foul. But it might be a good idea. Just cleanse it, man, and make it beautiful because I'm telling you, you're good at this. And the less things you give yourself to think about, you've already proven that you can find that success. Or try it on replay this weekend. Well, it's just, you shouldn't have brown and red and green, right? So what's going on there? But what I'm seeing is you don't have an '05 fib here, but you do have an '05 fib here. So if you're running a 5.1 template on your 13.2 along with a 13.2 template, then you're using a 5.1 template to measure swings to create extra areas and stuff and noise that doesn't need to be there, and it may be distracting you from what you do need to look at. Well, then I'll tell you what, you trade what you got and don't trade into the gap theory. It's less likely to work. And guys, nobody ever has to do anything that I ever say. Sometimes I give suggestions that I think will be helpful. Feel free to politely decline. You'll never hurt my feelings. Mr. Flowers, on this one, gap theory got you. And that's the same idea. Gap theory got you here. But we did a little lesson using your picture about the momentum phase on the trigger lines. And this is what we're doing. We're doing the momentum phase. Let's talk about it real quick. What is the momentum phase? The momentum phase, if I take these small triggers, as long as my bars are out here to the left, I'm in the momentum phase. When they start to work back in, I'm losing momentum on the small chart. When they're completely swallowed up, it's anything can happen once again. So the same as the large triggers have that momentum, weak, strong, anything can happen. I'm in the momentum phase, right, on the large triggers here. And then as they start to come in, the smalls follow, we get that anything can happen right at a termination. So when you're looking for these, I'm just going to jump into the trade. Your best bet, the highest chance of success, where the biggest amount of smiles come from, is where you have that little separation. So right when you clear the trouble, looking for that opportunity with this amazing strength, and it gives you room all the way until the momentum goes away. Does that make sense? I think a lot of you guys don't realize that there's more to this trade than just jumping in. It's certainly not just a jump in trade. There's moving parts that need to be respected for sure. Good stuff. Good lesson there too. And then Paul, that was the one. Gap theory got you. Got a lot of us today, I think. And then Mr. Flowers. Another one of those jump in trades. Snaps right back. And see how it never closes on the wrong side and it keeps going. Not areas inside of triggers, right? There, yeah, I guess there is right here. There's your mid band. It's inside of the triggers. Um, you do have momentum. You are coming from a termination. And I love that. You do have momentum. I'm not sure what that is. Window of opportunity here. Oh, that's just the old one. And you were right. It made it up there. But it came all the way back here before it did. And that's the same one. I love this look. This is how Nexgen teaches the momentum trade. When a termination turns the market, when the small triggers are super strong, do you notice how we're in the momentum phase here? See how we're on the momentum phase here on the large chart? And it snaps back right to the trigger, right to the midband. You're in at the top. It's a snapback, yeah. And it's not a perfect trend trade. This is you taking advantage because it's right here. You don't even have odds favorable momentum from a trend trade standpoint. But what you do have is a termination that just reversed the market. You are in the momentum phase on both charts. So you're just riding that momentum and getting paid on it. I love it. I think it's a beautiful trade. But what you get here, and we started teaching this in 2004. Well, I didn't, but in 2004, it said if you get a termination condition and those small triggers on the large chart roll, look for a little snapback to them. And that little snapback tends to be the little snapback right here to the large triggers on the small chart. And that worked beautifully. Nice job. From the resource page, Paul, you can. Man, let Jason knock it out for you. If you're not real computer savvy, and because it is NinjaTrader 7, let Jason. It'll take him 3 minutes. What would take me like 30 minutes. So then Josh, we did review yours. And then Erla, you can do it right on. So right from the resources page, if you scroll towards the bottom, it's the second link. Oh no, coding? I don't know anything about coding, but yeah, there's your Nexgen indicators and templates right there. Hold on, let me see if that'll give you the actual link to that. Maybe it will. All right, Erla, termination, momentum phase, jump in, out at troubles. Missed that one, that's okay, but still got in and took it up. Erla, beautiful. And I love this. Let me get in before trouble, let me get out at trouble, let me wait for trouble to do what it does, and then I'll just get back in and keep making money. Erla, that is such a nice trade, taking advantage of that momentum. Beauty. Josh, I can't tell you how much I like that you write your rules on the chart. Good top? Yeah. Odds favorable? Yes. Clear path? Well, it's 50-50. Look, you took it at the mid-band with lots of resistance. Took a shot for a 50-50. 48.25. I am inclined to believe 648. Well, I can't see where the 48s are, but it looks like they're all the way down here. Did you really take it at the mid-band, Josh? Oh, it didn't fill you? You ready for me to Sunday school you? Here's my window of opportunity. You guys remember when we were teaching the window of opportunity, I said some of you are going to put your entries up higher and miss the trade? Because from a termination with everything screaming, Josh, this is where the bottom of the window pays dividends. Especially, and this is just kind of a NASDAQ thing, look at your small triggers, how far away they are. 2 ticks below your mid-band. Why not your areas inside of favorable large triggers? Why does everybody have such a fetish for the midband. It is pretty. But the midband is only one of three areas that can be inside of that favorable large triggers. And if you look at this crazy high concentration of areas, they're all below the midband. I bet that's not true. I bet that every time you enter at fibs or the one-to-ones you lose, $20 says you could show me 10 losers and we'll find a reason why it wasn't the midbands or the one-to-ones or the fibs or the one-to-ones. So, and that's probably exactly what happened because I know I did that too. And this is where consistency pays dividends. I really think it does. This is where, because it's a 50-50, right? And the divergence prints, you might say, maybe I will go higher. And that's totally cool. And your entry is not a bad entry at all. These small triggers so far away were pretty cool. That helps a lot. And one of the things, and let me see if I can do it on your chart. I'm going to blow this one way up. I'm going to turn it into... And guys, we're at that point at the end of the classroom where I'm just turning it into as many lessons as I can. And I'm dragging them out a little bit. And even if it doesn't pertain to your trade, what I'm trying to do is do a little more. So let me make this huge. So let's talk about indecision entries, right? Where we're not sure, where I think it could be here or here or here or here or here. And I've got a little stigma that says don't do it at the fibs, wait for the midband, which is cool, Josh. No worries at all. When I know that it could go higher, but I don't want to miss it if it goes from the low, the bottom of the previous bar right there, I'll put a stop order just below that so that if it goes up higher, so for example, like right here, I have that stop order as it hits resistance. The next bar forms, I move it up. The next bar forms, I move it up. And I'm willing to chase it up all the way to the one-to-ones inside of the window. And then what that does is it forces the market to come back down to me. But not only come back down to me, it forces the market to get below the midpoint of the previous bar. No, a stop order, stopping myself in. And that's just one of the little cheat ways that you can kind of jump in and say, I need to be a little patient. So I'll make them prove it to me. I'll make them push in the direction of the trade before I really commit full force. I mean, you could use it anywhere. But on the NASDAQ, Josh, when I hit the area and these small triggers are more than a full bar away, I'm in that freaking trade without hesitation. I don't double think anything on the NASDAQ, but the NASDAQ's different, right? There's more to look at on the NASDAQ. There's more things that you have to process on the NASDAQ to get the right entries. Zorro, everything says down. You take the first snap back to the small triggers. Mr. Flowers, this is a lot like what you did. When the termination starts to roll everything, that first opportunity comes from the snapback. Zorro, you kill it and you're out at trouble. And then you take the momentum style trade and you said, well, the loss of momentum is a good reason to get out. And that one got a little short-sighted. Sometimes on these, I'll wait for an actual reversal bar, especially when the large chart looks like this. But beautiful trading, Zorro. Going with direction, going with momentum, taking all the advantages and finding a way to capitalize. And then Cav, man, you love trading in determination conditions. Bad bottom, odds favorable, divergence off of one-to-ones, and you get in. And once again, guys, people will take trades that don't line up. And man, these make me bite my nails again. It's like being 8 years old. I could find more reasons to not take this trade than to take this trade. And for me, divergence from one to ones, especially on the Nasdaq, is I couldn't care less what happens next, especially into a termination, especially from a bad bottom. And you did it beautifully, and you're not greedy on these trades, and I love it. But between split triggers, into a termination, divergence printing, I'm glad you got it. I'm glad you got it. 2 trades all morning. Yeah, I didn't have one this morning. Um, and you're at a point, Cav, where I'll point it out, but I'm not going to harp on it. You know it's a low probability trade, and you managed it hyper aggressively and did a great job with it. So let's just virtual high five and be good. Guys, when you understand what problems are, you formulate a plan on how to circumvent them. And I'm going to show you right here. I'm going to use Cav's picture. And I'm going to, one little dot. That's it. One little dot. There is zero, what if it breaks? There is zero, I hope it breaks. There is zero, I wonder if, maybe it would, could it possibly? And guys, this is a byproduct of chart reading. So Cav, maybe I am going to harp on it, but all positive. Is as soon as you speak to yourselves in advantages, as soon as you recognize, I can't find the right thing, what the problem is, then you don't care what happens next. And when we talk about advantages, momentum leads the way. Odds favorable momentum, right? Every trigger is up, every chart is green, everything is going the right direction. And all this is saying I'm willing to take a shot. But I know it's not a home run. So I guess I'm just going to keep throwing the idea that once you're a chart reader, it's pretty cool, the stuff that you can pull off. And Cav, you just gave us a great example of pretty cool. So thank you for that. Crude oil's been kind of in fits, hasn't it? Termination, pushed up, pushed down, pushing up into a termination. Crude oil's been a pain in the butt. S&P is an absolute pain in the butt. Not gonna lie, guys. This might be a better day to be at the beach. This might be a better day to go take a walk, to hang out, do something. What do you guys want to talk about? I'm all out of smart stuff, guys. Cav, we got a little bit of the storm. No worries, Paul. We got a little bit of the storm. We got thunderstorms, no big deal, a lot of rain. Houston got obliterated. My folks are up here this weekend. My wife's having a birthday, and their house and their whole neighborhood. Oh, absolutely. And Mr. Flowers, do me a favor. Keep posting charts and keep asking. We're going to keep doing this forever. Um, that sounds funny. Paul W., have a great weekend, man. Yeah. Tornadoes are pretty unlikely down in Houston. I can only think of one or two in my lifetime. And where they hit yesterday was about 3 miles from where my wife and I owned our last house before we left the area. So I've got friends over there that I'm checking on, making sure everybody's good, but it just seemed to take rooftops. It didn't really demolish. Gary, I know squat about basketball, man. I know nothing about basketball. You do not want me to talk about basketball. Every time John tells me he's watching the NBA playoffs, I'm like, I've tried. I can't do it. I can't speak intelligently. I was so bad at basketball, it made me dislike basketball, I think. Um, what else? You guys have a plan. You have rules. You know how to take pictures of the individual pieces to put them together. What's our read right now? Termination, determination, 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 determination. 82 degrees and sunny in Chicago? Very nice. I don't enjoy the game. That's the problem. Is I try. I try to watch it and get into it, and I just can't. I don't know why. I've never been a basketball fan. I've been to a couple live games. Those are fun. The energy is cool. They do not destroy your other shoulder, Gary. Those things don't heal like they used to. I went over the handlebars on my mountain bike about 4 years ago, and my right shoulder is still jacked up from it. Guys, any questions, any concepts? We're about to have an early weekend here. I don't want to. I want to talk about everything you guys want to talk about, but I'm out. I'm done. Miss Debbie, you too. It looks sunny out here for us this weekend. Go play. You're just watching, Kenan. No trades today? Today is a patience day, isn't it? Today is a 90% of what I do is absolutely nothing. 10% of what I do. Man, Cav, you too. Enjoy it. Enjoy it. Are any of you guys in Trader Chat? You ever go over to Trader Chat? Why not share them with me, Kenan? Why are you hiding them? I know how to find you. No, key to basketball, Gary, is turn it off and go do something you enjoy. Or get a beer. I can't. Gluten hurts me. That's one of the sadnesses of my life, guys. And there aren't any good gluten-free beers. So what's the quickest way to get to where you want to be? Kenan, you did it, man. Here we go. Oh, man. You opened a can of worms now. It takes you so long to work the screenshot app? So practice over the weekend a little bit. No, you're good. Practice over the weekend. Just go. So do this for me. Do this for me. This weekend, I want you to do me a favor. I want you to take 20 pictures on your charts of termination conditions. Okay? Super easy. I want you to mash that button, and all I want you to do is that and write out why it's a termination condition. And that repetition, you are going to be so solid coming into next week that you're going to show me everything that you do. And we are going to have a blast getting you exactly where you want to be. Man, Gary, I don't know anybody that's trading Top Step anymore. Not that I think there's anything wrong with it. I don't know anybody that is. And I had a little deal. Let me see if I can find it. There we go. Oops. This is the educational path, ladies and gentlemen. Let's make it big for all of our old tire eyes. Here comes the nope. Can you not hear? Guys, give me a Y if you can hear me. There we go. Thanks, guys. To minimize your learning curve. That's what we all want to do, right? To minimize our learning curve. Post pictures of your trades in class, every trade. Win, lose, or draw. And if you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? I think this is one of the challenges because we are in a room of alphas, right? We're in a room of guys that were successful in business, that were pioneers in their field, that were star of the track team, that dated the cheerleaders, right? Or dated the head football player, depending on whatever. And we're all these people that are so accustomed to success because we're good at what we do that it's hard sometimes to take a step back and become a student. And I get this. I'm the same way. Um, you need feedback, guys. You need that feedback. And if you're on simulator, you participate in class, you can't lose money. It's okay to be a student. You need somebody to tell you what you did right or wrong. I needed it. I needed it bad. And I refused to accept it in the beginning, and it cost me a lot of money. The fact that I'm here 15 hours every week, guys, and I'm willing to give you feedback and talk about everything that you see and everything that you do, guys, that's what sets us apart. I'm not giving you a couple pictures and saying good luck. I'm saying here's a rock solid plan. Practice it and ask for feedback. Let's get you where you want to be. And I'm telling you right now that you all can. So you've got to post, you've got to study, you've got to participate, you've got to take pictures, you've got to follow rules, you've got to use the spreadsheet if you really want to get the best of the best out of Nexgen. Um, I compare it to, watch this. Let's go to YouTube real quick and let's just Google Tiger Woods swing, right? Is there anybody in here that's going to be able to do what Tiger Woods does just from watching this video? Are any of you going to get that turn? Are any of you going to get that rotation? Is anybody's head going to stay still? Look at the lag. Oh my gosh. I just watched the video. I'm going to go shoot a 65. It just doesn't work that way, guys. You've got to get in and you got to get the reps. So that's what the class is. It's getting the reps. And Tiger Woods has a coach, or he had a coach. I don't know that he does anymore. Michael Jordan had a coach. Wayne Gretzky had a coach. Serena Williams had a coach. John McEnroe had a coach. Andre the Giant probably didn't have a coach because wrestling's fake. I know that's a shock to a lot of you. But everybody that excels, right? CEOs have mentors. Everybody takes advantage of somebody else's knowledge, right? Somebody else's willingness to share. And guys, my willingness to share goes off the charts, but I don't know if you don't know, right? Chris L sitting in his room going, "What the hell is a window of opportunity?" But until he asks it, I don't know. LeBron spends $3 million a year on coaches, trainers, and nutritionists, and it's allowed him to make $30 million a year. That's a small investment. That's pretty cool. My wife won't let me, Chris. Just looking for good bottoms and tops, right? That's all we can do. Just waiting for it. Waiting for it. Being patient. Hanging out. Doing nothing. Get a little handheld video game, right? I use a sketchbook. I'm an artsy-fartsy kind of guy, so I've got a sketchbook on my desk. And when my rules aren't being met, I'm either working on educational material for you guys or I'm drawing. Yesterday, I put together 70 questions for our AI program, and I took 2 trades during it over the course of an hour. Have you guys played with that over in the main room yet, where you go in and ask a question, and now we're starting to get these AI bots that come in and answer them straight out of the user guide? Get over there and ask questions. If there's questions that you wanted access to, let me know what they are. We'll get it put into the system. We're looking for everything right now. We are combing the chat rooms, looking for key phrases and stuff. So trying to make it 100% you don't need Novak anymore. We'll see if that works out. What else? I'm rambling right now. I totally get that. This is where my brother sends me a message and goes, dude, shut up. Make them ask questions. Awesome, Malcolm. Always need to know that. So should have gotten in here on the pull back to the midband, right? So you took the momentum trade. Yeah, so what did you do? You took the jump in trade. You guys are absolutely mesmerized with these jump in trades. I'm not mad about them though. I'm not mad about the jump in trades. They work better when you've got some room, right? So one of the things, Malcolm, and let's just break it down like the whole thing. And I agree, that was probably your best entry. Even over here was a good entry. But right here, your momentum is great. I love it. Everything is screaming down. You're coming from a good top. Life is good. Your bars are even outside. I don't have any problems with this trade at all. I think that getting in there is cool. This right here is a pretty big red flag for me because it's a line in the sand where they've already made the decision to steal momentum. Does that make sense? But that's okay. You've got momentum on both charts. Dig it. So here's the deal. And I guess the first question is, do you recognize that as a momentum trade? And I think this is one of the biggest challenges is if you can't name a trade, how do you manage it? So you recognize it as a momentum trade. So let's define momentum. And I'm probably going a little beyond, right, Malcolm? Small's outside of large. Space between the two. That's strong triggers. Are you comfortable with that? Okay. At your time of entry, are the smalls outside of the large? So if this is our definition, does this follow it? Not so much, right? Does that make sense? And what I'm trying to do is I'm trying to logically kind of come through this. If I'm going to take a momentum trade, whoops. If I'm going to take a momentum trade, would it be advantageous? I don't know how to spell advantageous. Is that right? There it is. To have momentum on both of my charts. This is a question that you have to answer for yourself. And if momentum is the prereq for entry, would losing said momentum be a reason to exit? Does that make sense? And Malcolm, this isn't really so much on your trade as much as it is just everything in general, right? If momentum is defined as smalls outside of the large, well, then I know that this doesn't quite fit the definition. So maybe it doesn't kill it for me, but it says, all right, let me be on edge a little bit. And then if my whole reason to take this trade is the momentum and that downward push, how do I define a loss of momentum? Because then I have a reason to exit. I think that you had a good reason to enter. I really do. I think that recognizing potential problems is going to pay dividends. I think that understanding where a loss of momentum is going to pay dividends and having a very solid plan for exiting these trades. And that's what most people don't have on these momentum trades is one, and it's getting better, but I would say 90% of the momentum trades people showed me didn't actually have momentum on their charts. And my brother told me once, he goes, Mark, if you're going to show me a momentum trade, you better show me 3 charts with odds favorable momentum. And I was like, whoa, okay. And then it goes back to management. You know, what if this is my reason for entry, I have to define my reason for exit. I have to have a very solid reason for exit. And Malcolm, your read is good, right? Your read is solid. And I don't even think that this was problematic. I think that you just held a little long. That's it. I just think maybe you stayed in that one a little longer than you needed to. So hopefully that's helpful. Cool. Is there a way to place a trade that automatically will place a stop loss? So, Kenan, I'm going to give you a fish and I'm going to teach you to fish, my friend. You ready? So here is the teaching you to fish. I'm going to go to the software user guide and I'm going to go to trade management, chart trader, and I'm going to give you this link and I want you to go through this weekend. But, so when you're looking for trades, let's go through the whole thing. The first thing we have to do is open up chart trader. And then right here where it says ATM strategy, these are your stops and losses. What market? So let's say it's crude oil or the S&P, right? I'm looking for the 12 tick stops. And the 12 ticks isn't where my stop goes necessarily. Do you remember the lesson, Kenan, where we're going to put our stop where the market shouldn't go, outside of that window of opportunity? So if I jump in just all willy-nilly, my stop doesn't go at an area inside of the triggers. That 12 ticks gives me time to put it where the market shouldn't go, wherever that may be. So 12 ticks is an arbitrary number. By clicking on the line, it lets you move it. And the same is true for moving targets. You can go through and move those anywhere you feel like they need to be. But the ATM strategy is key. Once that's in place, it's going to give you those stops and targets. If it says none here and I enter the market, I don't have any stops or targets. So if the ceiling fan falls on my head and knocks me out, I have nothing to protect me if that market ramps up. If you ever do this, you have two choices. You can either exit the market, or since we sold, the opposite of a sold is a buy. So I'm going to right click on my chart and I'm just going to go buy stop market 2. And that'll take me out of the trade. And for a target, I could put buy limit 2. And if it comes down and hits this, it takes me out of the trade. So I can put them in manually. If I forget to do my ATM strategy, it's always easier to put in the ATM strategy. But what you have to remember if you put it in manually is if it comes up and hits my stop, whoops, I put it in the wrong spot. Or it hits my target, either way. If it hits my stop, I have to remember to cancel out the other side of it. But ideally, you just come through 12 ticks for crude oil for the S&P, 24 NASDAQ stops. And just remember that the 12 isn't where the stop goes. The 12 gives you time to react, to put the stop where it belongs. But right down here in the drop-down menu. And I absolutely positively refuse to trade without stops or targets in place. I may adjust my targets based on market conditions, and I will move my stops based on market conditions. But I will always go into a trade with the idea that I need to protect myself, that I need to, if I went short right here, and it's in determination conditions, well then this 12 ticks, I don't know, maybe it needs to be higher where the market shouldn't go, right? Maybe I'm saying, oh, I'm only willing to go 3 ticks below that trigger line. And it's termination, it's ugly everywhere in a range-bound market. And maybe I'm saying because it's not the perfect trade, I'm going to make a little money. If it hits these 1-to-1s again, I'm going to exit that first contract. But if they break through there, who knows? Maybe they'll go to the next fib. So I might adjust these all over the place. But what I want to do is I want to have a reason for the adjustment. I want to have a reason for the moving. I don't have a clear path. I don't have momentum. The only thing I had was an area inside of triggers. And it's rare that the small chart trumps the large chart. And maybe it'll stop me out. I don't know. We're playing on sim. Who cares? Was that helpful? I hope that was helpful. These are the things that you can go back. Let me guys give you one more. If you really want to practice taking pictures of trades, if you really want to practice stops, targets, getting in, moving, scaling charts, all that sort of stuff, go through this weekend and do some market replay. Go back, watch this video, set up market replay, replay every day this week. Hit pause before you take a trade and make sure your rules are met. This is how you get experience, guys. This is how you get repetitions. You can double, triple your reps by going back and doing market replay. You can play every day twice, 3 times. You can practice. You can get in. You can develop plans. Market replay is a huge, huge asset. I probably market replay 4 or 5 days a week. Just to test patterns, just to practice, just to reinforce, just to go through, build patience, all that sort of stuff. So you can do the exact same thing. And I think that might be it, guys. That might be all that I have for today. For the week. All that I have for the week. Look at that termination condition. So you guys, go stretch your legs. Have some fun. Have an amazing weekend. Smile lots. Do something that's fun. I'm going to come back Monday morning, 9 a.m. We're going to do it again. And my promise to you guys is we're just going to keep doing it. We are going to keep doing it every day until